tomorrow sharp 7 o'clock I should be able to start class. Otherwise I'll inform sir. I need sharp 7. I need coffee also before that. Before that. Yes, a very good morning to all of you. Volume from where? Which? Up. Hello. Yeah, enough. Right, so what is the definition of auditing? Audit is an independent examination of financial information of any entity, whether profit-oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon. Okay. How can the auditor satisfy himself honestly regarding the same? That accounts have been drawn up with reference to the entries in the books of account. Then entries in the books of account have been supported by the underlying documents. Then none of the entries have been omitted and nothing which is not there in the books has found place in the financial statements. Then the financial statement amounts are clear and unambiguous. Then after that, the amounts in the financial statements are classified, described in accordance with the accounting standards, and the statement of accounts present a true and fair picture. Right, true and fair picture. Okay, right. Then after that we came to the objectives of the audit. What was the objectives of the audit? We came to essay 200. What was essay 200? Overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. What is the overall objective of the auditor in accordance with essay 200? To obtain the reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion as to whether the financial statements have been prepared by the management in accordance with an applicable financial reporting framework, and then to report the findings of the auditor. And how do you report the findings of the auditor? In accordance with the standards on auditing. Right, so we studied three terms over here: reasonable assurance, free from material misstatement, and applicable financial reporting framework. What is applicable financial reporting framework? The framework which is to be applied while doing the accounting. The laws and regulations which are to be followed by the management in the preparation of the financial statements. Example, for an Indian company, what would be the AFRF? Indian Accounting Standards and Schedule 3 to the Companies Act. Okay. Then, free from material misstatement. What do you mean by free from material misstatement? There is no material difference between what is and what should be. So, in more simple language, there is no material fraud or error. There is no material fraud or error. And reasonable assurance is a high level of assurance, but not an absolute assurance due to the inherent limitations of an audit. The most important one being that evidence obtained by the auditor is persuasive rather than conclusive in nature. Right? So reasonable assurance is a high level of assurance, but it is not an absolute assurance. Why? Because the evidence obtained by the auditor is persuasive rather than conclusive in nature. Is it clear to all of you? And we said why reasonable assurance? It says because of the inherent limitations of an audit. What were the inherent limitations of an audit? NNOT. What does NNOT stand for? Nature of financial reporting, nature of audit procedures, the other matters affecting the limitation of the audit, and the timeliness of financial reporting, and the balance between the benefit and the cost. Right. What did I tell you? There are 5 steps you need to remember. Step 1, NNOT. Step 2, N stands for nature of financial reporting. Third step, you need to know the explanation to be written for the same. Fourth one, you need to have the proper presentation. And fifth one, you need to have the proper time management. Okay, right. Then after the inherent limitations, we came to the advantages of an independent audit. So what were the advantages of an independent audit? Reliability of financial statements safeguards financial interests. Moral check on employees, up-to-date books of account. Review of operations, wastages and losses. Settlement of accounts, settlement of trade disputes. Then taxes and loans and the government support. Right, so these were the advantages of an independent audit. Okay, right. Then after the advantages, we came to ERII. What was ERII? Ethical requirements including the independence. Right, so whenever you have to do an audit, what does SA 200 say? That auditor, you need to comply with certain ethical requirements. What are those ethical requirements? Integrity, objectivity, professional competence and due care, confidentiality and the professional behavior. Integrity, straightforward and honest. Right, fair, truthfulness and fairness in his dealing in his dealing, not to compromise. Then objectivity is what? Not to compromise on the expression of the opinion. That is not to be biased, be unbiased, no conflict of interest, no undue influence of others. That is the objectivity. Then we talked about professional competence and due care. So technically he should be strong, and due care, work-wise he should do the work in a very reasonable care and skill. Should they do the work properly? Confidentiality, not to disclose the secrets of the client unless required by law or taken the prior consent of the client for the same. And professional behavior, avoid any behavior which might bring the discredit to the profession. Okay, right, so ethical requirements including the independence. And what do you mean by independence of the auditor? That the judgment of a person is not subordinate to the wishes or directions of another person who might have engaged him or for his own self-interest. And what does it say? Independence is a condition of mind and personal character and should not be confused with the superficial and visible standards of independence which are sometimes imposed by law. And independence is the keystone upon which the respect and dignity of the profession is based. And what is required is not only the independence of the mind, what is also required is the independence of the appearance. So you should not only be, but you should also appear to be independent. Not only be, but also appear to be independent. To whom you should appear to be independent? To a third party. So you are saying I am study, but somebody else also, they should think like you are study. Right, so be and appear to be. Right, so what does it say? Independence not only of the mind but also the independence in the appearance of the auditor. Right, because what was the title of our audit report also? Independent Auditors Report. Right, Independent Auditors Report. What is the title of SA 200? Overall objectives of the independent auditor. So everywhere we are talking about the independence of the auditor. We are talking about the independence of the auditor. Right, then after that we came to the discussion regarding the qualities of an auditor. What were the qualities of an auditor? Personal qualities, right? All the qualities that go into the making of a good businessman also contribute to the making of a good auditor. Then integrity, objectivity and independence and reasonable care and skill. Then professional qualities, that is the professional training and the education, right? And then after that, three knowledge of the laws, knowledge of the accounting and also knowledge of the client's business, right? So these were the qualities of an auditor, right? Then we came to the question regarding the principal aspects to be covered in an audit, the overall audit approach, right? What were the principal aspects to be covered in an audit? The overall audit approach over there, 2323. Do you remember the 2323 points over there? Accounting system and internal control system, systems and procedures. Then capital revenue distinction, mathematical accuracy, comparison with underlying records. Then verification of assets and liabilities, validity of transactions, compliance with statutory requirements, true and fair view and the reporting requirements, right? Also known as the overall Audit approach, also known as the overall audit approach. Okay. Then after that we discussed regarding the types of audit. What were the two types of audit? Audits which are required under law and audits which are voluntary audit, which are not required under any particular law. But you know, because of the advantages associated with an audit, voluntarily you can get these audits done. Okay. Right. And then after that we came to the question on the relationship of the auditing with the other disciplines. And which other disciplines did we talk about? Auditing and accounting, auditing and law, auditing and economics, auditing and statistics and mathematics. So that covers your foundation as such, right? Then after that, auditing and data processing, auditing and production, auditing and financial management, and one different one over there, auditing and the behavioral science, right? Auditing and the behavioral science. Okay, right? So this is up to what we have already discussed so far. Right, this is up to what we have already discussed so far. Okay, right. So if you now look into the books over there, you have in the point 1.2 over there, the objectives and the scope of audit. So yesterday I missed discussing with you the scope of audit. So now what we will do, we will first finish discussing with the scope of audit. Then after that we'll come to the discussion in essay 200 regarding the term professional skepticism. Right, we'll come to essay 200 to discuss the term professional skepticism. Then in essay 200, we also discuss one more term called as the professional judgment, right? We discuss professional judgment. Then we come to a detailed discussion regarding the concept of the independence of the auditor. And then in chapter 1, we are left with essay 299. What is 299? Standard on auditing 299, which is regarding the joint audit of the financial statements. But as I told you yesterday, that this we will do it at some later point of time. Right now we will not go into essay 299. But do you know joint audit? In yesterday, Reliance Industries audit report, 2 auditors that signed that report. So that means it was a joint audit. More than one firm of auditors was appointed to do the audit of the financial statements, right? So that's the joint audit of the financial statements. But that we will do it later. So right now, our agenda for discussion is going to be the scope of audit, professional skepticism, professional judgment. Again, in essay 200, you have a small discussion of conduct of an audit in accordance with the standards on auditing, and then the discussion regarding the independence of the auditor. Okay, right. So now, do you know the objective of the audit? Is it very clear to everyone? What is your objective when you are appointed as an auditor of a company? You say, what do? I know I am the auditor of Growth Limited, but as an auditor, what am I supposed to do? What is my responsibility? So my objective is to obtain the reasonable assurance. What is my objective? To obtain the reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion that financial statements have been prepared by the management in accordance with an applicable financial reporting framework, and then to report the findings of the auditor in accordance with the standards on auditing. This is the overall objective of the independent auditor. So what is it that I need to achieve in an audit? What is it that I need to do in an audit? I need to obtain the reasonable assurance and then express an opinion. Is it clear to everyone? SE 200, the overall objectives of the independent auditor. Okay. Now let's come to the other part of the term over there, which talks about what is the scope of the audit, right? What is the scope of the audit? So what do you mean by scope of the audit? Can anybody give me an example, or what you say, your understanding regarding what could be meant by scope of audit? Areas covered by audit. Okay, what could be the areas covered by audit? What could be the very simple answer you can give me? What is the scope of audit? I have to do an audit. I have to express an opinion. I have to obtain a reasonable assurance. But what is my scope of audit? Very easy. I discussed this with you yesterday. Right. My scope of audit is nothing but the financial statements of the entity. Because I do audit of the balance sheet, profit and loss account, then the cash flow statement, statement of changes in equity, and the summary of the significant accounting policies and the other explanatory information. So this is my scope of the audit. Are you understanding that? What I do the audit of is the scope of my audit. Is it clear? So I do audit of the financial statements. So that is my scope of the audit. Okay. Now when I go for the audit, listen to me carefully. I go for the audit and management tells me that auditor, we will not allow you to check the inventory. You understand inventory? You understand inventory, everyone? Yes. So auditor goes for the audit. Now obviously when I go for the audit, I have to do the audit of the entire financial statements. But what is management telling me? That no, auditor, we will not allow you to check the inventory. So now what was the scope of my audit? To do the audit of the entire financial statements. But now what management is doing? They are limiting the scope of my audit. They are restricting the scope of my audit. They are telling me not to check the inventory. Are you understanding? So there is one term called as the scope of audit, and second very important term is the limitation on the scope of the audit, or there is a term called as the restriction on the scope of the audit. Do you understand this term? Right? Limitation on scope, restriction on scope of the audit. Do you understand the term? Limitation on scope, restriction on scope of the audit? Limitation means management is not allowing me to check certain part of the financial statements. They are not permitting me to obtain the evidence for certain items of the financial statements. They are limiting the scope of my audit. They are restricting the scope of my audit, right? Generally in an audit, what I should do? I should cover the entire accounting information. So that is the entire financial statements. I should check whether they are reliable and sufficient. All aspects of the enterprise are to be covered in an audit, right? Auditor needs to form an opinion whether relevant information is properly disclosed. When will you say it is properly disclosed? When it is given as per the accounting standards and the Schedule 3. Then auditor is not expected to perform duties which fall outside the scope of his competence. So employees have a uniform to wear, and now whether the employees are wearing the uniform to work or not, is that to be checked by the auditor? Yes, employees have a uniform to wear. So whether the employees of the company, are they wearing the uniform or no? Is that going to be checked in the statutory audit? No, that is outside the scope of the audit. That is outside the scope of his competence. And then there could be constraints on the scope of the audit. What is constraints on the scope of the audit? Limitation on scope, restriction on scope. You can also call it as the constraints on the scope of audit. It all means one and the same. There could be constraints on the scope of the audit that impair means what? Which affect, and a badly affect, which badly affect the auditor's ability to express an unqualified opinion. What is an unqualified opinion? Later on we'll study more in detail, but unqualified wherein I say true and fair view. That means I'm giving a clean report that financial statements of Reliance Industries give a true and fair view. But see, if I check the entire financial statements, I can give an audit report saying that entire financial statements give a true and fair view. But if they don't allow me to check inventory, then how can I express an opinion for the entire financial statements that they are true and fair view? Will it impair my ability to give an unqualified opinion? Yes. Will it impair? Impair means what? Will it affect my ability to give a clean report? Yes, it will affect my ability to give a clean report. Are you able to follow the term, everyone? Yes, did you understand this last point? Constraints on the scope of audit that impair the auditor's ability to express an unqualified opinion should be set out in his audit report, right? So should be set out in the audit report, right? So this is what you mean by objective of audit, and also then what you mean by the scope of the audit. And then we had also discussed the concept of the true and fair, the 7 points in the concept of the true and fair, the principal aspects to be covered in an audit, types of audit, advantages of the audit, the inherent limitations of an audit, relationship of auditing with the other disciplines, the qualities of an auditor, independence of the auditor. We've just done the introduction part. This part we are yet to come to. And this part of the independence of the auditor we are yet to come to. Joint audit, I told you I'll discuss with you later, right? Joint audit, we'll discuss it later, right? Overall objectives of the auditor, there we've already discussed the overall objective, applicable financial reporting framework, reasonable assurance. You remember reasonable assurance, everyone? It's a high level of assurance, but not an absolute assurance. Is it an assurance as to the future viability of the entity or the efficiency or effectiveness of the management? No. Right? And then after that, the ethical requirements, integrity, objectivity, professional competence and due care, confidentiality, professional behavior. Then talking about the requirement of independence. And now coming to the next discussion over there, which is regarding the professional skepticism, then professional judgment, and then conduct of an audit in accordance with the standards on auditing. So now coming to the next round of our discussion, which is regarding the concept of the professional skepticism. Yes, somebody had a question in the class? Yes, tell me.
How can they not allow you to check the inventory that lead to window dressing? Like how can an organization not let the auditor check the inventory?
So we will come to a detailed discussion regarding the limitation on the scope of the audit. Like sometimes the reason could be genuine also, that the inventory of the company has been destroyed by fire, or the accounting records of the company have been destroyed by fire. So, or they say, auditor, we would have allowed you to check, but now there is a practical difficulty. You can't check it. You understand? That is one situation. And second, because they have done a fraud, they don't want the auditor to check the inventory. So in all cases, you have to, apply your audit procedures and decide whether I should continue with this audit or whether I should resign from this audit. Even that you need to think of in such a situation. Right, so limitation on scope, we have to address it. Whenever management imposes a limitation on scope, it is a serious matter in the audit. We cannot take it lightly. Right, understood? Okay. Right, so clear all of you? Right, so let's now start with the next discussion, which is again an ATF, the professional skepticism. Right, the professional skepticism. Okay, right, so now, yes, what does it mean to be skeptical, to be professionally skeptical and all of that over here? Okay, so now let's visualize a situation wherein in your childhood, in your building where you're staying, in your apartment where you stayed, right, you would have played the game of hide and seek over there. Right, you would have played the game of hide and seek over there, right? So one of the person has to, it's his turn, yes, and then he has to go behind some wall and say over there 10, 20, 30, 40, 50, and then all the other people, they will hide. Yes, all the other people, they will hide, and then this person will shout saying that I am coming, ready, and something, and then nobody will reply. Why? Because if you reply, then they will come to know where you are hiding, from where the voice is coming. Okay, that is why nobody will reply. But then this fellow comes saying that I am coming. And now this fellow knows that generally in the building or generally in the area where they play, generally somebody hides behind the car. Right? Like generally everybody hides behind this particular pillar, or there is always somebody who is there behind that particular tree. Okay, so that person knows that these are generally the areas where the people are hiding. So he goes behind the car and he says, oh, you are there, so come out. And you come out over there. Or he goes behind the tree, but he says, generally somebody hides behind the tree, but today nobody is hiding behind the tree. So possible, na? You think that there might be somebody hiding behind the tree, but there may not be anybody hiding also, or there might be somebody. And there might have identified some new place also to hide, which place was not there before, but some new place to hide might also be identified. Okay, this is, and now sometimes what happens, that person comes from the back and tells you, that they have caught you before you catch them. Are you understanding that? But sometimes if this particular person who has to find the people who are hiding over there, he says, I am sitting over here, whenever you want to, all the people who are hiding, whenever you want to come out, you come out, I am not going to search for you, I am going to sit over here. Will they ever take you in the team? Will they ever take you in the team? They'll say, you go home, you play video game. And you don't come over here. No? Why? What you are saying? I will sit over here. Whenever you have to come out, you come out. I'm not going to find for you. I'm not going to look out for you. Okay. Now, so similarly, when an auditor goes for an audit, are you able to visualize the game of hide and seek? Okay. Similarly, now when the auditor goes for the audit, the management provides the financial statements to the auditor. Right, and now what happens in the financial statements? I'm just giving an example over here. There is a possibility that management has hidden one fraud in inventory. They've hidden one fraud in the share loans of the company. They've hidden one fraud in the purchases of the company. Okay. Now, as an auditor, when I go for the audit of the financial statements, is the management going to say, management, these are our financial statements and this is the list of our fraud and error for the year? Are they going to do that? Are they going to give you list of fraud and error for the year ended 31st March 2025? No, they are going to show as if there is no fraud. The person who is hiding, what he will try to show? That as if that person is not hiding over there. You understand that? No. Right. So now what does it say over here? What we have to do, literally play a game of hide and seek with the management. Like we know generally in inventory there is a chance of fraud. Generally in purchases there is a chance of fraud. So accordingly we do the checking of purchases. Like I told you, generally you know behind the car somebody is hiding. Generally behind the tree somebody is hiding. Are you understanding that? Right. So then let me give you one more example and then we come to the technical part of professional skepticism. Like say, you know, you had told at home that you will reach home at 10 o'clock in the night. Okay. And now your parents know that you will be coming home at 10 o'clock in the night. And now it is 10:30, 11 o'clock in the night and you've not yet come back home and you've not even made a call. Now, yes, do some questions come in the mind of your parents? Right? Do some questions come in the mind of your parents? Like what type of questions would be coming in the mind of your parents? Like anybody? Yes, some, yes? Appropriate answers you can give me? Right? What thoughts would come to their mind? Is he safe? Exactly. Is he safe? Okay, because he had gone on the two-wheeler. Okay. What is he doing right now? Yeah, exactly. What is he doing right now? He said he will come at 10 o'clock. Okay. When he will come, generally he calls whenever that is late. But today, why not called? Is there any trouble? Where is he exactly? Okay. Right, but question is coming to the mind. Exactly, are you thinking? You don't want to think anything wrong, but still, you know, you are worried. Okay, what has happened over there or so? And then after that, at 11:15, you come home and then you say, oh, my vehicle got punctured and that is why I got late. You understand? And my phone also got discharged or something like that. Okay, but so then it is, but what questioning mind? No, your mind started creating the questions over there. Are you understanding that? So what is professional skepticism? It says it is an attitude. What is professional skepticism? It is an attitude that includes a questioning mind. That includes a questioning mind. Like yesterday I told you, training expenses given to the employees, 5 crore has been capitalized. Auditor mind said, why? Training expenses, why you are capitalizing? It is not right. Questioning mind, he is reasoning. Okay, how can you capitalize training expenses? 1,000 highlighters you are purchasing every month. Why are you purchasing so much of stationery every month? Questioning mind. Are you understanding that? Questioning mind, right? So, an attitude that includes a questioning mind, being alert to conditions which may indicate a possible misstatement due to error or fraud. So, being alert to conditions which may indicate a possible misstatement. Do you know misstatement, everyone? What is misstatement? Difference between what is and what should be. What is possible misstatement? Chances of mistake, difference between what is and what should be. Chances of difference between what is and what should be. Like last year traveling expenses of the company 7 crore. This year traveling expenses of the company 8 crore looks reasonable. And an increase by 1 crore on year. Last year traveling expenses 7 crore. This year traveling expenses 237 crore. Are you understanding now? Now what we are saying, being alert to a condition. What is the condition? Okay, so much the traveling expenses is increased as compared to the previous year, which may indicate a possible misstatement. So I am saying there might be a fraud and error in the traveling expenses. I am not saying that there is a fraud. I am saying there is a chance of fraud in the traveling and expenses of the company. Are you understanding that? Being alert to conditions which may indicate a possible misstatement due to error or fraud, and a critical critical assessment of the audit evidence. And what you do a critical assessment of the audit evidence. Are you understanding that? Critical assessment of the audit evidence. Like what? I am checking the rent expenditure of the client. I am checking the rent expenditure of the client. Obviously, to check the rent expenditure, what supporting do I require? I require the rent agreement. So I ask client, please give me the rent agreement. Right, so I go to the client and I tell the client, please give me the rent agreement. And then now, how much is the rent expenditure of the client? Say it is 1 lakh rupee per month. And now 1 lakh rupee per month is the rent expenditure of the client. And I ask the client to give me the rent agreement. Okay. And now what happens? Yes. Whose audit I am doing? I am doing the audit of Growth Limited. Is it right? How much is the rent expenditure per month? 1 lakh rupees per month. And I ask, and which year I am doing the audit for? 31st March 2025. Okay. And I ask the client to give me the rent agreement. And they give me a rent agreement. And they give me the rent agreement. And this is the rent agreement which I have obtained. Okay. And then what I say? Oh yes, I wanted rent agreement. Client has given me rent agreement. And it is some 1 and some 0 in front of that, so it should be 1 lakh only. And then I say, okay, rent expense seems to be proper. Rent expense seems to be proper. And then you say, yes, 1 lakh per month into 12 months, 12 lakh rent expenditure recorded is proper. Oh my God, right? Did you even, were you careful while checking the rent agreement? No, the rent agreement you want of 2025, they have given you a rent agreement of the year 1995. It is not even the rent agreement with Growth Limited, it is the rent agreement with DK Limited. And the rent expenditure per month is not 1 lakh, the rent expenditure per month is only 10,000 over there. So there were so many misstatements over there, but did you detect them? No. Why? Because you were not alert, because you were not skeptical. Are you understanding that? Because you did not do a critical assessment of the audit evidence. You have to do a critical assessment. You have to keep your eyes wide open. You understand, no, when you are checking the audit evidence, okay, you otherwise, what happens sometimes, you might miss out. No, you saw 1 lakh over here and you saw 10,000 and some zeros, 1 and some zeros, and you might conclude, 1 lakh, 1 lakh. It might be an overlook also, na? By overlooking also it might so happen that you saw 1 and some 0, 1 and some 0 and you concluded so. Right? But if you be alert, yes, if you be alert, then that will ensure what? You do the critical assessment of the audit evidence. Okay, I go for the audit and I ask client, please give me the minutes of the meeting. And a client, please give me the minutes of the meeting. Do you understand minutes? Right, minutes of the meetings of the board of directors, audit committee, shareholders and all of that. I ask the client to give me the minutes of the meeting. Okay, of all the board minutes during the year. Client gives me the minutes of the meeting. First thing what I check whether these minutes have been signed. And what I find out that these minutes have not been signed. So auditor says, I cannot trust these, I cannot place, reliance on these particular minutes of the meeting as they have not been signed. What management tells the auditor? Auditor, you don't worry. If you like these minutes of the meeting, we will get it signed for you. If you like these minutes of the meeting, we will get them signed for you. It doesn't work that way, no. Minutes of the meeting should already be prepared, they should already be signed, and then they should be provided to the auditor. Here they are saying, auditor, for you, we have prepared minutes of the meeting. If you like these minutes of the meeting, we will get them signed for you. Does it work that way? No, it does not work that way. In that case, you are not giving the correct information to the auditor. You are giving the, juggled up information, not the correct, inappropriate information you are providing to the auditor in such a case. Right? So what you need to do is you need to be alert. Now, to maintain professional skepticism, if I look at the dictionary meaning of the word skepticism, it says to maintain an attitude of disbelief. To maintain an attitude of disbelief. That means what? Not to accept anything blindly. Not to accept anything blindly. To maintain an attitude of disbelief. Not to accept anything blindly. Not to accept anything without reason. right? Not to accept anything without reason, right? So unless and until you don't get to see the rent agreement, you say, I will not believe that your rent expenditure is properly recorded. Not to accept without reason. That means you are going to be alert. That means you are going to be cautious. Okay, skepticism is a beautiful word. Why? Because it says not to accept without reason and also not to suspect without reason. Why? Because if I start suspecting without reason, then it will become investigation. Exactly. And what did we study yesterday in the inherent limitations of an audit? That audit is not an investigation. So not to accept without reason, not to suspect without reason. What does that mean? Like I want to check the rent expenditure of 1 lakh rupee. A client has given me the rent agreement. The rent agreement is for the year 2025. It is in the name of Growth Limited. Rent amount written is how much? 1 lakh rupees per month. Okay, and now I have to check the rent agreement. Okay, so now is it related to the current period? Yes. Is it in the name of the client? Yes. Is the amount of the agreement right? Amount of the rent right? Yes. So now in this case, do I need to have a suspicion? No, but I still think that they might have done a fraud in the rent agreement. No, now there is no reason for you to suspect. First, should you have accepted it without reason? No. Unless and until they don't providing me the supporting, I will not accept it. And after they provided me the supporting, after I finish my checking, am I going to suspect without reason? No. I will also not suspect without reason. Right? So not to accept without reason and also not to suspect without reason. That is the attitude of professional skepticism. To maintain an attitude of disbelief. I told you yesterday, as an auditor, you're supposed to be cautious. You're not supposed to be suspicious, right? So being cautious is nothing but maintaining an attitude of professional skepticism. Professional skepticism means an attitude that includes a questioning mind, being alert to conditions which may indicate a possible misstatement due to error or fraud, and a critical assessment of the audit evidence, right? Questioning mind. The moment client gives you any particular account to check, like say they give you the debtors, immediately your mind should start generating the questions. Like, what example I gave you, that, you said you will come at home at 10 o'clock, but now it is 11 o'clock and you've not come home. So immediately do thoughts start coming to the mind? Questions, do they start coming to the mind? Yes. Similarly, the moment the auditor sees the debtors of the company, trade receivables of the company, there have to be questions coming in the mind of the auditor. Okay, really, has the company done the credit sales? Right, then whether any provision for bad and doubtful debts have been received, right, whether this money is going to be actually received from the debtor at a future date, right, whether any of the debtor has already paid, right, all these thoughts have to come, whether the debtors are related to Growth Limited or should not happen, they are related to DK Limited or so, they are relating to the current financial year 2025. Right, so what does it mean? Immediately questions are coming to your mind. Are you accepting it blindly? Okay, they are telling me debtors 1,000 crore, so you say, okay, debtor 1,000 crore, so 1,000 crore. No. Immediately your mind is generating the questions, and then based on the question you are asking who, when, where, how come, how much, and based on that you do the checking, and based on the checking then you conclude that yes, debtors is right or wrong. Do you understand professional skepticism? Yes, professional skepticism, like when you're playing the game of hide and seek also, do you need to be alert? Do you need to be alert? So just as you are alert in playing the game of hide and seek, similarly you need to be alert when you are doing an audit also. Like say example, you go to a grocery store, your mother has told you to bring some curds. Curd, okay, and now you go to the grocery store and you go over there and say, give me a packet of curd, and you go over there, you pay 50 rupees and you get the packet of curd and come back home. Now the moment you come back home with the packet of curd, are you listening to me? The moment you come back home with the packet of curd, your mom says, this is already expired. You don't even check. That's the problem with you. You're not at all alert. This was the, curd which was manufactured in January 2023. And now you've got it in the month of February 2025. I'm exaggerating, but just an example I'm giving over there. Okay, right. But you should have checked, no? The expiry period on the particular product. Like when you go to buy medicines also. Should you not check the expiry date of the medicines? Yes. So if you check the expiry date of the medicines, that means what? You are alert. That means what? You are alert. You are not accepting anything blindly. Not to accept anything blindly. That is the attitude of professional skepticism. Okay. So what does it say? See, very easily we can remember the definition. An attitude that includes a questioning mind, being alert to conditions which may indicate a possible misstatement due to error or fraud, and a critical assessment of the audit evidence. That is, with the magnifying glass you do the assessment of the audit evidence. Don't draw all this in your exam paper. You understand? This is not supposed to be drawn in your exam paper. But with just these three symbols, can you remember professional skepticism? An attitude that includes a questioning mind, being alert to conditions which may indicate a possible misstatement due to error or fraud, and a critical assessment of the audit evidence. Oh, yesterday we had discussed independence of mind and independence in appearance. So look over here, independence of mind. Right? Nobody should be sitting in your mind. Right? And second, to the world also you should appear independent. So independence in appearance. Right? So independence in your mind also, you should be knowing that you are independent, and to a third party also you should appear to be independent. So independence not only of the mind but also the independence of the appearance. Okay. Anyways, right now coming to professional skepticism. It is an attitude that includes a questioning mind. Who, when, where, how come. Yes. So an attitude that includes a questioning mind, being alert to conditions. Being alert to conditions. So you're being careful. Right? Okay, last year traveling expenses 7 crore, this year 237 crore. So you're being alert to condition which may indicate a possible misstatement due to error or fraud. So I am not saying that traveling expenses is not right, but because of the significant amount of increase in the traveling expenses, I think it may not be right. So what is that? Being alert to conditions which may indicate a possible misstatement due to error or fraud, and a critical assessment of the audit evidence, right? So critical assessment of the audit evidence. You're going to check it like putting, you keeping your eyes wide open, being very alert in the audit. You are going to do the checking of the audit evidence. That is professional skepticism. Okay. Now, how does it help you? Being professionally skeptical, how does it help you in the audit, right? So includes being alert to. Now, say example, I'm doing the audit of a company, and the company Growth Limited says that we have an FD with the bank and a fixed deposit which we have kept with the bank of 10 crore. So client gives me the fixed deposit receipt. Obviously for this, what I would like to check is the copy of the FDR, the fixed deposit receipt. And what does the fixed deposit receipt say? 10 crore FD. That is the amount which is mentioned in the fixed deposit receipt. Are you understanding that? I am the auditor. Okay. And so, yes, I am the auditor, CA Sparkle. Right? And then whose audit I am doing? I am doing the audit of Growth Limited. And now Growth Limited has kept an FD with the bank. One of the audit procedure is that auditor, you can directly ask the bank. We will later on come to the discussion on this one. Later on, yes, auditor, you can directly ask the bank regarding, please tell us how much FD has Growth Limited kept with you. How much FD has Growth Limited kept with you? This is called as external confirmations. We'll come to that in chapter number 2. Right? External confirmations. I'm confirming from an external party, third party. I'm confirming it externally from the bank. Are you able to follow this? So I ask bank, please tell us how much FD has Growth Limited kept with you. So they say yes, they have kept an FD of 2 crore with us. They've kept an FD of 2 crore with us. Okay, now what you might happen for you, you say, oh, fixed deposit receipt 10 crore. Fixed deposit receipt 10 crore. Bank has confirmed how much? Bank has confirmed 2 crore. You say, correct, correct. You'll say, where is your attention? What is the first thing which will come to your mind? Where is your attention? Where you're paying attention to? Okay, here it is 10 crore, their bank is only confirming 2 crore. How you're saying? Are you alert? Are you having a questioning mind? No, you're not alert. You're not having a questioning mind. So what does it say? The first advantage is that you're able to find out audit evidence that contradicts other audit evidence obtained. So it is contradicting. See, in the bank also should have confirmed what? 10 crore. Then I would have not had any problem. Are you understanding that? But now instead of, okay, now, yes, we studied one term yesterday called as persuasive. What is persuasive? Most likely to be true. What is conclusive? Only that is true. And there is one more term in the context of audit evidence, which is corroborative audit evidence, which is corroborative. Right, I'm talking about audit evidence. What is audit evidence? One, persuasive, most likely to be true. Conclusive, only that is true. And corroborative. What is corroborative? Like say fixed deposit receipt. What is the amount written? 10 crore. And bank also. How much balance did the bank also confirm? 10 crore. So is it same? So did I already have one evidence? Did I already have the fixed deposit receipt with me? Right, did I get an additional evidence? Did I get a supporting evidence? Did I get an additional evidence? Did I get one more supporting evidence for the same? Yes, so this additional supporting evidence is called as the corroborative evidence. Additional evidence to an evidence, further evidence to an evidence. And a further evidence, additional evidence to an evidence is referred to as the corroborative evidence. If I want to explain it to you in non-technical language, corroborative evidence simply means cross-check. Corroborative evidence in simple language, what does it mean? Cross-check. What is the term I have written over there? Corroborative. What does it say? To corroborate means? To corroborate means what? You already have one evidence. You want to check it with another evidence from a different source and want to check whether they are the same. If they are the same, no problem. However, if they are not the same, that means they are contradictory. That means they are contradictory. Are you understanding? In case of Satyam, yes, Satyam Computer Services Limited, do you know in 2009, Satyam Computer Services Limited, a 7,000 crore fraud happened in the financial statements of Satyam Computer Services Limited. Right, 7,000 crore fraud. And what happened in the 7,000 crore fraud? One fraud was that they showed bogus cash and bank balances of 5,040 crore. Right, so they said we have 5,040 crore of cash and bank balances with us, whereas actually they did not have these cash and bank balances with them. But auditor, he did the audit, and every year auditor kept on saying the true and fair view. So what auditor did, he relied on the photocopies of the fixed deposit receipts which were fake. He did not get the confirmation from the bank. Auditor, what he did, he relied on the photocopies of the fixed deposit receipts which were there with the company. He did not obtain the confirmation, he did not cross-check with the bank. Right? So that is why auditor could not find out the misstatement. So 2009, the fraud was revealed. 2009, the fraud was revealed, but it was happening in the company since last 7 years. So in 2002, the fraud started happening in the company. And each of the year, if you see the audit report of the auditor, it says true and fair, true and fair, true and fair. Are you understanding that? So rather, after Satyam, the emphasis started increasing on getting the confirmations from the bank. They started emphasizing more on getting the confirmations from the banks, from the financial institutions, and so. Right, so how does professional skepticism help you to find out evidence that contradicts the other audit evidence that has been obtained? Right, that information that brings into question the reliability of the documents and the responses to inquiries to be used as the audit evidence. Like I told you, responses to inquiries. Like, you know, I was talking to the CEO of the company, and what he told me, I asked him, okay, what is the future vision of the company, what is the future objectives of the company, and he said that our revenue will multiply 5 times, right? That we will take over another, we will be taken over by another company, we will have our operations in 20 more countries and so. And now when he's saying all this, only you say, okay, what he's talking, they don't even have the money to pay the salary of the security guard and all these things he's talking about over here, right? So responses to inquiries to be used as audit evidence or the reliability of the documents. So they have given me the rent agreement. Is the rent agreement reliable? No, if I told you if the rent agreement is of 1995, it is with DK Limited and the amount in the rent agreement is 10,000, is the rent agreement reliable? No. Does it bring into question the reliability of the documents? Yes. And also the responses to the inquiry. So I asked, but I say I cannot rely on that. Why? Because I am alert in the audit. Then conditions that may indicate a possible fraud, like the example I gave you of the traveling expenses. Last year traveling expenses 7 crore, this year 237 crore. Right? Conditions that may indicate a possible fraud. Am I saying that there is a fraud in traveling expenses? Am I saying that there is a fraud 100%? No, no. I'm just saying there is a higher chance of fraud in the traveling expenses of the company. Okay. And now, what is the title of SA 200? Overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. So how I need to do my audit? I need to do my audit in accordance with the standards on auditing. So whatever is told in the standards, do I need to follow that? Whatever is mentioned in the standards, do I need to perform those audit procedures? Yes. But should I also be alert whether in addition to the standards, are there any additional audit procedures which are required to be performed? That I will come to know only when I am alert in the audit. Right? That suggests the need for audit procedures in addition to those required by the essays. So you say, though this is not mentioned in the essay, but still I perform these audit procedures because I thought it was an important one. Are you understanding that? Right? So that is professional skepticism, being alert to. Being alert to what? Audit evidence that contradicts the other audit evidence that contradicts the other audit evidence, information that brings into question the reliability of the documents, conditions that may indicate a possible fraud, and whether any additional audit procedures are required in addition to those required by the essays. Right? So this is how professional skepticism will help you. When do you need to be skeptical in the audit? You have to be skeptical throughout the audit. And when you're skeptical, what risk gets reduced? You know, what is the risk which gets reduced when you are skeptical in the audit? So what risk gets reduced when you are skeptical in the audit? Again, same one example and we are done with it. Like what does it say? 7 crore and 237 crore. Right? Had I not been alert, what I would have said? Might have done more traveling expenses. Let them travel, no? What problem I have? You understand? Normally, if you were not alert auditor, if you were not a skeptical auditor, if you are not an auditor filled up with questions in your mind, then what you would have said, let them travel more, no problem. They've given the travel supporting expense vouchers and everything. But now, because you are a skeptical auditor, because you are an alert auditor, you say, no, 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 no. How come it can increase so much? You know, how come it has increased so much or so? And then you try to look into the traveling expenses and then you come to know that traveling nothing. Traveling expenses only 10 crore, 227 crore. What has happened? They have paid bribes to the government employees. But in the books of account of the company, can you open an account called as 2 bribe account? In the books of account of the company, can you open an account called as 2 bribe, 2 government employee, so and so? Right? Can you open such an account? No. So why? That is why you do the window dressing. You disguise it as the traveling expenses, staff welfare, society welfare, and entertainment expenses and all of that. Right? So then you come to know that this 227 crore is a bribe which has been paid to the government employees. Right? So what risk is reduced when you maintain an attitude of professional skepticism? The risk of overlooking unusual circumstances. What risk is reduced? Please listen to me very, very carefully. In the exam, you don't have to write anything on your own. You have to write what we are discussing over here. Okay, what risk gets reduced when you maintain an attitude of professional skepticism? The risk of overlooking unusual circumstances. That risk gets reduced when you maintain an attitude of professional skepticism. Okay, right. Then what you say? Like last year inventory was right. This year also inventory will be right only. Last year rent expenditure was correctly recorded. This year rent expenditure will be correctly recorded. How on the basis of last year you can conclude for the current year? No. So what does it say? What risk is reduced? The risk of overgeneralizing when drawing conclusions from audit observation. Again, that risk is reduced when you maintain an attitude of professional skepticism. Yes, what are we studying? What risk gets reduced when you maintain an attitude of professional skepticism? The risk of overlooking unusual circumstances, the risk of overgeneralizing when drawing the conclusions from the audit observations. Then what risk gets reduced when you maintain an attitude of professional skepticism? The risk of using the inappropriate assumptions in determining the nature, timing and extent of the audit procedures. Right, we'll come to this term, nature, timing and extent of the audit procedure. But right now, just for you to have a basic understanding of this, like extent means sample size. Okay, how many samples to check? Is it a judgment of the auditor? Right? Is it an assumption that out of 100 I should check 10 transactions, I should check 20 transactions? Yes. And obviously the more I am alert, the more I will take the correct assumptions. Right? And if I am not alert, I will use the inappropriate assumptions. So the risk of using inappropriate assumptions gets reduced when you maintain an attitude of professional skepticism. Right? So what gets reduced when you maintain an attitude of professional skepticism? 3 risks gets reduced. The risk of overlooking, the risk of overgeneralizing, and the risk of using the inappropriate assumptions. These gets reduced when you maintain an attitude of professional skepticism. Right? So first part we studied the definition. Second part we studied how does it help you in the audit. Third part we studied what are the risks which gets reduced when you maintain an attitude of professional skepticism. And then after that some other discussion over there, that professional skepticism is necessary to the critical assessment of the audit evidence. Was critical assessment there in the definition of audit evidence, of definition of professional skepticism? Right, so critical assessment of the audit evidence. It also includes consideration of the audit evidence obtained in the light of circumstances. In case where a fraud risk factor exists, a single document of a nature which is susceptible to fraud is the sole supporting evidence for a material financial statement amount. Like what does this example over here mean? Okay, you know 31st March or say 31st March 2025 is the year end. And you are checking the legal expenses of the company, legal expenses of the company, and you saw 25th of March 2025. If you check the legal expenses account, full year, no legal expenditure incurred at all. Full year, is there any legal expenditure incurred? No legal expenditure incurred at all in the entire year. But just on 25th of March, they said every month legal expenditure of 10 lakh and for the year 12 months, so 120 lakh of legal expenditure. They have made a provision for legal expense of 120 lakh for the entire year on 25th of March. Now, as an auditor, no, you find this very odd. Okay, full year too you did not pay any fees to the lawyer. Full year you did not take any lawyer services. And now all of a sudden at the end of the year you are saying that every month you took legal services, legal opinion for 10 lakh rupees, or every month you paid the lawyer 10 lakh rupees. You know, your mind is not ready to accept it. Are you able to understand this? Your mind is saying, no, this seems to be that there is a fraud in the legal expenses of the company, that they are doing over recording of the expenses of the company. They are recording the bogus journal entry. They are recording the fictitious journal entry in the books of account. It is not a genuine journal entry. It is a bogus journal entry. They are doing the window dressing. They are doing the manipulation of the accounts. They are doing the fraud in the accounting. How I came to know? Because I was alert. How I came to know? Because I was alert. What does it say? Fraud risk factor and a single document. So one document I got. What document I got? Provision entry of 120 lakh. Single document, provision entry of 120 lakh. That is susceptible to fraud, susceptible, prone to fraud, where there is chances of fraud, is the sole supporting evidence for a material financial statement amount. So obviously 120 lakh is going to be a material financial statement amount. Right, so, okay, otherwise, you know what happens if you're not skeptical and client tells that auditor, we have a provision for legal expenses of 120 lakh. Auditor, we have made a provision for taxation of 200 crore. Auditor says, okay, fine. You might have made a provision, you have to pay taxes to the government. No, as an auditor, what you will do? You will do a critical assessment of the audit evidence. You'll ask, provision for tax 200 crore, please show me your tax working. Yes, please show me your tax working, and then I will see all the disallowed and allowed expenses in the tax working, and then check the tax rate and everything and how the tax has been calculated and so. And then you say all disallowed expenditure you have allowed over here. No, your tax liability is not going to be 200 crore. Your tax liability will come to 500 crore, or your tax liability might come to 2 crore. It could be any of the way. See, how a company manipulates the accounts, no? How a company manipulates the accounts. If it wants a subsidy from the government, if it wants a subsidy, if it wants to show that it's a sick unit, then it will record more of the expenses. It will record more of the expenses. However, if it wants to increase their share price, if it wants to increase their share price, they want to show higher profits of the company, then what they will do? They will show less of the expenses. You understand? No, depending upon the intention to be achieved, accordingly the manipulation will be done. Are you understanding my sentence? Depending upon the intention to be achieved, accordingly the manipulation would be done. Okay, so now you are staying with a roommate, say in the hostel or in the PG or somewhere over there, and then now your friend asks you, okay, what are you doing? Okay, so now you know, generally today is Sunday, and now today this person, my friend, is asking me what you are doing, and if I tell him that, you know, I am free right now, so then that friend will tell, come, let's clean the room today. He's very fond of cleanliness, so he'll say, come, let's both of us together clean the room, or, you know, my auntie lives in the city, so let's go to meet the auntie or something, you know, or let us do some work or something over there. But then, okay, then now this friend says, no, I'm not interested in any of this. So he says, no, I have lot of work today, you know, I'm very busy today, no time at all. Okay, so then that other friend makes a small face. Oh, you don't have time? Actually, you know, I had an extra movie ticket with me. The friend with whom I was supposed to go is not coming now, so that's why I thought you could have come with me. But you say you are busy, so okay, no problem. Then you say, actually, I'm not that busy also. I think I can come for the movie. Oh my God. Immediately change. And first what you thought? First what you said, no, I'm very busy, because you were scared he will tell you to clean the room and everything. You said, no, I'll tell him I'm very busy today. But the moment he said extra movie ticket, you said, no, actually I just got a message on my phone that I don't have extra work, okay, I don't need to do the work today. And so immediately accordingly manipulating, like you want a subsidy from the government. So you say, oh, we are a sick unit. We require a lot of government subsidies. You want to increase the share price of the company. Immediately show that you are the best performers in having the great profits of the company or so. Right? Having the great profits of the company or so. Right? So if you look into, like, because I'm talking about the manipulations over here, like say if we look into Satyam Computer Services Limited, right? They are fraud reporting which was done over there in case of Satyam, right? Just a moment. Yes, so just to make it realistic and practical for you, right? It says to the board of directors of Satyam Computer Services Limited from B. Ramalinga Raju, Chairman Satyam Computer Services Limited, January 7, 2009. This is the original document through which the fraud was confessed. Okay, dear board members. Okay, so now Ramalinga Raju is saying, dear board members, it is with deep regret. Just look at the amount of the regret now, and tremendous burden. Look at the amount of burden that I am carrying on my conscience, that I would like to bring the following facts to your notice. The balance sheet carries, as of September 30, 2008, inflated, non-existent cash and bank balances of 5,040 crore as against 5,361 crore reflected in the books of the company. So actual cash with the company was only 321 crore. But how much cash they showed in the books of account? 5,361 crore. So 5,040 crore was the bogus cash which was shown in the books of account. Obviously, if you show bogus cash, you have to show the bogus interest on that cash, on that bank balance over there. So an accrued interest of 376 crore, which is non-existent. Then an understated liability of 1,230 crore on account of funds arranged by me. So 1,230 crore, that much the profits of the company have been overstated. That much the profits of the company have been overstated. And next one is the epic. You know, if you read the D1, that is epic. An overstated debtor's position of 490 crore. What do they say? How much debtors does the company have? 490, 1, 2, 3, 4, 5, 6, 7. 490 crore of the debtor. This is what they are showing in their books of account. Whereas actually, how much debtor they have? 2,651 rupees. As against 2,651 rupees reflected in the books of account. 2651. That's it. You show you have debtors of 490 crore. Whereas actually the debtors of the company are only 2600. Just 2,651. That's why I told you, no, it is epic. Right. Is it clear to all of you? Okay. Now, for the September quarter, we reported a revenue of 2,700 crore. So, yes, quarterly results of the company are declared. So for September quarter, what report did they declare? Result did they declare? Revenue of 2,700 crore and an operating margin of 649 crore. That is 24% of the revenue as against the actual revenue. So how much was the actual revenue of the company? Only 2,112 crore. And what they showed, how much revenue they have? 2,700 crore. And an actual operating margin of 61 crore. And what they showed, operating margin as 649 crore, 10 times more profit than the actual profit. 10 times more profit than the actual profit, and this has resulted in artificial cash and bank balances going up by rupees 588 crore in Q2 alone. So only in one quarter, in 3 months, 588 crore of the bogus cash they had generated in the books of account. Right? So obviously what happens, you have to show the more revenue. So if you want to show the more revenue, you have to show the more debtors. Right, you have to show the more debtors, and then you also have to show the receivables from the debtors. Right, so you also need to increase your cash. And then now you're saying you have so much of revenue. So obviously you might be having those many people who are working in the software team. You might be having those many software employees working in your organization. So you maintain a lot of staff also in order to prove the higher expenditure. You understand? You maintain a lot of staff also to prove the higher expenditure. So that again becomes an additional burden, right? You understand? That again becomes an additional burden, right? So the gap in the balance sheet has arisen purely on account of the inflated profits over a period of last several years. What started as a marginal gap between actual operating profit and the one reflected in the books of account continued to grow over the years, right? It has attained unmanageable proportions of the size of the company grew significantly, okay? Every attempt made to eliminate the gap failed, and then it says it was as the promoters held a small percentage of equity, the concern was that poor performance would result in a takeover, thereby exposing the gap. Right? If anybody came to know it was like riding a tiger and not knowing how to get off without being eaten. Okay, right. So anyways, that is the fraud that they are talking about over there, right? So we are talking over here about the critical assessment of the audit evidence, right? You cannot take audit lightly. Right? Nowadays, the role of the auditor, right? Nowadays, the role of the auditor is very, very crucial. You know, if a chartered accountant does not do his work properly, one, he's caught under the Chartered Accountants Act. Right? One, the chartered accountant, if he does not do his work properly, he'll be guilty of professional misconduct by the ICAI. Then he'll also attract the penalty provisions under the Companies Act 2013. And also under the Companies Act 2013, we have now somebody called as the NFRA, the National Financial Reporting Authority. Right, which can also take the action against the CA, which can also take the action against the auditor, right? So National Financial Reporting Authority, right? So doing an audit is not an easy task in today's time. And though there is automation, though there is tally, you don't need to check whether the entry has been correctly posted or whether the balance is tallying or something like that. That basic routine checking is no longer required to be done. But for these type of frauds which are happening in the organization, as an auditor, do you need to maintain an attitude of professional skepticism? Yes, you need to maintain an attitude of professional skepticism. And what does it say? May accept records and documents as genuine unless auditor has reason to believe to the contrary. Right, so when I told you, when I check the rent agreement and after checking the rent agreement, I don't find any discrepancy in the rent agreement, then will I doubt it? I check the rent agreement, I don't find any discrepancy in the rent agreement, then will I doubt it? No, what did we say? Not to accept without reason, but also not to suspect without reason. Not to accept without reason and not to suspect without reason. Nevertheless, the auditor is required to consider the reliability of the information. And in case of doubt about the reliability or indications of possible fraud, the essays require the auditor to investigate further and determine what modifications or additions to the audit procedures are necessary to resolve the matter. Right, so in case if you find out that the rent agreement is of 1995, are you going to investigate that matter further? Are you going to investigate? If you come to know you're doing audit of 2025 and they give you rent agreement of 1995, are you going to rely on it? No. Are you going to investigate the matter further? Yes, you are going to investigate the matter further. Is it a possibility that there could be a fraud in the rent agreement, in the rent expenditure of the company? Yes. There is a chance that there could be a fraud. Okay. An auditor cannot be expected to disregard the past experience of the honesty and integrity of the entity's management and those charged with governance. Do you remember those charged with governance, everyone? Right? TCWG, the highest level of management in an organization. Right, so now you have been doing the audit of this company since 2022. Okay, and now once what happened, say somewhere, like just as an example, somewhere one of your, say you have a departmental store, a very big departmental store, and now there are some 40-50 people working in your departmental store, and now there is a owner, of that particular departmental store, and say the house and the departmental store, they are connected, just one next to the other or so. So one day what he does, just knowingly to check the integrity of his employees, the owner of the store, he keeps 100 rupees note over here, just randomly, just 100 rupees note, so that everybody can see that there is a 100 rupees note over here. And then from morning to evening he keeps the note and he notices that none of the employees did ever touch the note or so. But then if he notices that one of the employee, what he did, he took the note. Right? He took the note and he took it. So then you come to know that, oh, these employees are not maintaining the integrity, ethical behavior, honesty, ethical behavior. And so another possibility is that what? That the employee comes to you and say that this, I found this 100 rupees note which was lying over there, please take it. Like sometimes if you find somebody's 1 rupee, 2 rupee also, anything, then you just call that person and say your money was fallen over here, so please take it over there. Okay, so now in case if this person, even though by mistake, if you take a pencil also of somebody at your home by mistake, or if you take a eraser of somebody at home by mistake, next day when you come to school, and you ensure that you return it back to that person, that yesterday by mistake I had taken your pencil or your eraser or something like that. And there are some students, if you open their bag, there is full jackpot over there of pencils and erasers and rulers of all the students in the class, collecting all pencils and rulers. Oh, mind conditioning is only not right, na? Something is wrong in the wiring of the brain. It's not a normal, it's something different in the mind over there. And on a small child, 4 or 5 year child, now how he is learning all this? Okay, I should collect everybody's pencils and erasers, and everybody is complaining to the class teacher, my pencil is missing, my eraser is missing, my pencil is not there. Teacher is saying, I will get for you, don't cry. You understand? And this student, nobody is able to find out only. And they're talking so genuinely and so nicely with everyone, giving answers in the class, very intelligent and all of that. So now, that is talking about integrity, ethical behavior. You understand? No, integrity, ethical behavior. So last year in this company, when you went for the audit, the management, right, last year in this company, when you went for the audit, and then management, what happened? By mistake, they had recorded one personal expenditure as a business expenditure. They had recorded one personal expenditure as a business expenditure of 120 rupees. Immediately they came and they told it to the auditor. Auditor, by mistake. They said, oh, auditor, by mistake. We have recorded the personal expenditure as the business expenditure. So we are just reversing this entry. I am paying back 120 rupees to the company. So you say, oh my God, what a God-fearing person. What a God-fearing person. And there's another person. Just say I purchased a printer yesterday for my home. Now, who will come to know whether I purchased the printer for my home or whether I purchase it for the office or so? So how much printer purchased? 23,000 rupees. You say just charge it to company account, say that printer has been purchased for office purposes, and you take it home. Are you understanding that? So this is what integrity. This is what the experience regarding the honesty and the integrity of the entities management and TCWG. Right? Do they distinguish between the business transactions and the personal transactions, or they don't keep any distinction between the personal transactions and the business transactions? So auditor cannot be expected to disregard the past experience. Nevertheless, a belief that management TCWG are honest and have integrity does not relieve the auditor the need to maintain professional skepticism. So you say, no, these people are very good, so no need for me to doubt them. Whether they are good or bad, do you need to be alert in the audit? Yes, you have to be alert in the audit. Okay, right? So is it clear to everyone? Professional skepticism. Right? Is it clear to everyone? Professional skepticism. Yes. And if we look at the question bank, what are the type of questions which have come regarding the professional skepticism? Right, just a minute. Right? Professional skepticism. What are the questions? Yes, no talking in the class. Yes, what does it say? The auditor cannot be expected to disregard past experience of honesty and integrity of the entities management and TCWG. And nevertheless, a belief that management and TCWG are honest and have integrity does not relieve the auditor of the need to maintain the professional skepticism. Explain. So you have to write down the entire paragraph relating to professional skepticism. The auditor is responsible for maintaining an attitude of professional skepticism throughout the audit. Do you agree with the statement? And then also, what does it say? The auditor will plan and perform the audit with professional skepticism, recognizing that circumstances may exist that may cause the financial statements to be materially misstated. An auditor shall plan and perform the audit with professional skepticism. Right? So first you write down the entire content of the professional skepticism. Then what does it say? Further, while obtaining the reasonable assurance, the auditor is responsible for maintaining professional skepticism throughout the audit, considering the potential for management override of control. Right? What does it say? Very important term over there, which will come in the chapter of fraud also. Right? Internal controls. Do you understand? Yesterday, had we seen the term internal controls? Controls which are inbuilt, which are within the organization. These internal controls are whose responsibility? These internal controls obviously are the responsibility of the management. Okay, to ensure that the citizens follow the traffic rule, whose responsibility? It is the responsibility of the traffic police. It is the to ensure that the citizens follow the traffic rules. Whose responsibility it is? It is the responsibility of the traffic police. Similarly, internal controls in the organization. Whose responsibility? It is the responsibility of the management. What management is doing? They are ensuring that everybody follows the control, but they themselves are not following the controls in the organization. They are overriding the controls in the organization. They themselves are not following the controls in the organization. They are telling employee that without voucher you cannot record a transaction. Without voucher you cannot record a transaction. So no employee records a transaction without a voucher. But they themselves, they record so many transactions without a voucher. They record so many transactions without a voucher. Are you understanding that? Management override of the control. So traffic policeman is telling everybody, don't break the traffic rule. Don't break the traffic rule. But what he does, he himself is breaking the traffic rule. Are you understanding that? Doctor is telling everybody, you should exercise 21 Surya Namaskaras. Doctor is telling everyone. But doctor himself is not doing one Surya Namaskara also. Right? So what is that? That is management override of the controls. Management override of the controls. And recognizing the fact, oh look at this, this is such an amazing sentence over there. That audit procedures that are effective for detecting an audit procedures that are effective for detecting an error may not be effective in detecting a fraud. Are you understanding? Audit procedures which are effective in detecting an error may not be effective in detecting a fraud. Can anybody give me a sentence from what we had discussed yesterday in the inherent limitations of an audit? I'll be so happy. Listen to my question. I'm saying yesterday we had discussed the inherent limitations of an audit. From that, can you give me the relevant sentence over here? Okay, it is saying that audit procedures which are effective in detecting an error may not be effective in detecting a fraud, because fraud may involve sophisticated and carefully organized schemes designed to conceal it. No? No, we'll go and see. I don't believe you. Okay, right, the inherent limitations of an audit. What was the inherent limitation of an audit over there? Right, the inherent limitations of the audit. What was the inherent limitation of the audit over there? That fraud may involve sophisticated and carefully organized schemes designed to conceal it. Remember that fraud may involve sophisticated and the carefully organized schemes designed to conceal it. But will error involve sophisticated and carefully organized schemes? No. So what does it say? Audit procedures which are effective in detecting an error may not be effective in detecting a fraud. Why? Because fraud is intentional. Because fraud is involving the sophisticated and the carefully organized schemes. Are you able to follow this, everyone? Okay, right, so that is one question regarding the professional skepticism, right? Those are the questions regarding the professional skepticism. Yes, and
The extra lines that you added, is there textbook or that is extra? What do you think?
this is the textbook.
No, the extra lines after that was professional.
Yeah.
Those 3 lines, is it a further addition or?
It is a further addition. It is not there in the text of the standard, but if you look at the suggested RTP of the ICAI, you see these additional points written over there. That is why those have been additionally added. So to avoid repetition, what is directly from the textbook, that I have given a reference to. And anything in addition to that which is required to be written, I have mentioned it over here. Is it clear? Yes, is it clear to all of you? Okay, right. So tell me once again, what is professional skepticism? An attitude that includes a questioning mind, being alert to conditions which may indicate a possible misstatement due to error or fraud, and a critical assessment of the audit evidence. Okay, then how does professional skepticism help you? It helps you to find out evidence that contradicts the other audit evidence, that information that brings into question the reliability of the documents, then conditions that may indicate a possible fraud, and any additional audit procedures beyond those required by the essays. Then what risk gets reduced when you maintain an attitude of professional skepticism? The risk of overlooking unusual circumstances, the risk of overgeneralizing, the risk of overgeneralizing, and the risk of using the inappropriate assumptions, the risk of using the inappropriate assumptions. At 9:30. Anything? Yes. I'll tell that time. Yes, yes, inappropriate assumptions, right? The inappropriate assumptions. Are you able to follow this, all of you? Right, so are we able to capture whatever we studied regarding professional skepticism? Yes, are you able to capture the entire content together? Yes, okay, yes.
Inappropriate assumptions.
Huh? No, I will, inappropriate assumptions, you are yet to understand nature, timing and extent of audit procedures. Once you understand nature, timing and extent of audit procedure, you will be able to understand that. Yes. Is it clear to all of you? Professional skepticism? Playing a game of hide and seek with the client. What does client try to hide? Fraud and error. As an auditor, what you are trying to do? You are trying to seek the fraud and error. You are trying to seek the fraud and error. Is it clear to all of you? Okay. Now coming to the next term of essay 200, which is regarding the professional judgment. Right. Now coming to the next term of essay 200, which is professional judgment. Okay. Right, so now professional judgment. Okay, what do you mean by judgment? It means the decision making. What do you mean by the judgment? It means the decision making. Then what do you mean by professional decision making? Like, example. Right, like say, let's take an example. Yes, till the time, like say when you were in first standard, second standard or so, and if anybody asks you, okay, what you want to become? So then you used to say, I want to become a pilot. Okay, like I want to become a soldier. And some different ideas you used to have, or sometimes some painting is going on in your house, so you sound so interesting, you go and color somebody's house. So you say, I want to become a painter. I want to paint everybody's house into different colors. Okay, then after that they said, okay, whatever you want to become, you can become. Okay, then 6th, 7th, 8th, 9th also, okay. We'll think of what to become and what doesn't, and something you say randomly. But when 10th standard comes, then actually you are standing at the crossroads, wherein you need to now decide whether to go for science, commerce or humanity, that is the arts. And whether to go for science, commerce or the arts. Okay, then now once that is decided, then how it is decided? You say, oh my God, physics, chemistry, biology, don't ask. Don't ask. All the students who are sitting in the CA classes, I think that could be the reason why you have come here. Okay, but now you might be thinking maybe that was better. Okay. Right, so physics, chemistry, biology, you say no. Right, then you say arts, there is no, just you become a teacher or something over there, and just humanity, psychology and all those fields, so not art. So then you say, oh, commerce, I will go for commerce. Okay, then you go for commerce, then there are only two things which are there, CA and MBA. And nowadays, most of the students, they go for a combination of both, CA and MBA. And then in addition to that, you can also do company secretary, cost accountancy, LLB, and the other degrees. Okay, right. So anyways, as I have come to this point, I will wish to take this as an opportunity to tell you something. Please listen. Yes, don't talk in the class. Yes, just listen to what I'm saying. Like, when you are pursuing, see, your primary basic degree which you need to achieve, which you need to get is the chartered accountancy degree. That is having the ultimate weightage and the importance for you. Okay, but there is no harm in case if you have the potential in you. If you don't have the potential in you, don't waste your parents' money. But in case if you have the potential in you, you can also consider simultaneously registering for company secretary or the cost accountancy course also. You understand? And then even those like CA exams happen in November, these exams happen in December, and then little bit the syllabus is similar also, and then little bit additional study you need to do, and so. And again, foundation, inter and final over there also is required to be completed. So what happens, in the process of clearing your chartered accountancy, you happen to clear your company secretary exams also, or your cost accountancy exams also in the process. God forbid, for any reason, if you are not able to clear your CA exams, at least you have something to fall upon. That is, you have some degree which you have completed over there. Are you understanding that? But it's not. Like, I wish, like I think I had to, why it didn't happen that when I was doing my studies, that some of my friends said that, what are you doing? So my friend would have said, okay, I'm doing company secretary also. And I would have gone with my friend, say, okay, you are doing, come, I will also fill the form with you. And I would have also filled the form, and probably I would have studied, because the time never comes later. You understand? No, then that time never comes later. Or when you want to do a CPA, you want to do the certified public accountant, or you want to do the MBA from a very recognized institution, you need to plan for it right away. Right? You need to have your plan A, plan B right away over there. Right? So just keep it. I'm giving this information to you on a very serious note from my experience, and like what happened to me should not happen to you, with that expectation. And it's so wonderful to have one more degree over there, and it's not difficult. You are anyways in the process of learning. And the next 4 years, 4 to 5 years of your life, rather now 4 years only, intermediate 3 years of articleship, and then you write your final exams and so. Right? These next 4 years of your life determine the next 40 years of your life. Right, regarding how you spend the remaining 40 years of your life, right, or remaining rest of your life, your professional life and all of that is dependent upon these 4 years. Whatever you studied from 1st to 10th or 12th standard or everything, that all write off. You understand? No. Now that has no significance, no relevance, nothing over here. Right now, it is only clearing of the intermediate exams, your articleship, and your CA final exams. And what I'm telling you, in addition to that, you can also, on a serious note, okay, consider pursuing the degrees such as company secretary, cost accountancy, LLB, whichever is your area of interest. Accordingly, you can consider. There's also an actuaries degree, but actuaries you can go for it for a little later, right? When you come to your CA final level or so, right? Actuary, just as there is architect, engineer, there is also the actuary. So those who are good with maths, they can go for actuaries also. You have an Indian Institute of Actuaries also. Right, so that's again a particular 16 papers or something which you need to write for the same. Okay, right. So anyways, that is just an additional information I'm telling you. So now, when you come to your 10th standard, then you have to decide whether to go for science, commerce or arts. Then when you come to commerce, then you have to decide BCom so you will do. And a graduation you will do. In addition to graduation, what to do? So then you say either MBA or LLB or CA. And then you decide why to do CA. So you say everybody in my family is doing CA. That is why I am also doing CA, or all my friends are doing CA, that is why I am also doing the CA. And that is how you take the decision. Right? Can one or two students in the class share with me an example regarding how they entered into the CA course, why they are into the CA course? Just one or two students who would like to give me a good answer? Nobody? Yes? How come you are in the CA course? You won't like, yes? Your cousin brother is a chartered accountant, so.
Basically, when he finished chartered accountancy, he was given a suit. I was inspired by the suit more than
Oh. Okay, so.
okay, so professional skills and white collar job. Quite
White collar job, right. Okay, right. Yes, anybody else? Friend's brother is a CA. Okay, living in Bombay, having a good life over there. Okay, so got inspired by it. Okay, one more? Anybody else? It is in the line only, all the answer paper. You've made them sit over here. Okay? You are the ones who are going to give the answer to ma'am. So you sit over here. These are your, what you say, representatives of your classroom or what? And what are you doing over there? You tell me how you came into CA course. You. You only. Don't nod your head. Look, I'm asking you. Now, how that person will identify? Yeah, don't look behind. Yes, you. How you came into CA course? But how you know that there is money over here? Okay. Right. So, yes, that could be the... Yes, so there is a reason, no? There is some particular reason regarding you know that's whatever is the passing percentage of the course. And you've still taken a decision to come into the CA course, right? You've still taken a decision to come into the CA course. Okay. Right. So now, yes, if this decision making is backed by certain logic, if this decision making is backed by certain logic, if there is some explanation, if there is some justification behind the decision that you have taken, then that is called as a professional decision making. So in other words, professional decision making could also be referred to as the informed decision making. Informed decision making, you have a rationale, you have an explanation, you have a justification behind your decision. Like now, where in an audit do you need to take a decision? That is the question, because we are talking about exercise professional judgment. So where in an audit do I need to exercise professional judgment? So it says throughout the audit. Throughout the audit. Right from the planning stage up to the conclusion stage, right from the planning stage up to the conclusion stage in the audit, auditor, you need to exercise the professional judgment. What does that mean? Okay, what audit procedures to perform? What audit evidence to obtain? How much is the audit risk? How much is the audit materiality? what are the management's judgment? To check management judgment, auditor, you require the professional judgment. Then the drawing of the conclusion. So throughout the audit, right from the planning up to the conclusion stage, which members of the engagement team, who all will go for doing this particular audit, how many days will be required to finish this particular audit, everything in the audit requires a decision to be taken. So where in an audit do you need to take a decision? You need to take a decision throughout the audit. Right? Like yesterday we talked about material misstatement, no? So materiality, what is materiality? It's a judgment. It is a judgment of the auditor. What did I say? What was the expenditure recorded in the books? Building amount 20 crore. As what it should have been 10 crore. What is the difference between the two? 10 crore. Now whether it is material or not, it depends on the materiality. If materiality is 2 crore, then this is material. If materiality is 70 crore, then this is not material. Are you understanding that? Right? So materiality, how you determine this 2 crore, 70 crore, that is again a judgment of the auditor. That is a decision making of the auditor. But if anybody asks me, okay, auditor, how you took materiality 2 crore? Auditor, how you took materiality 70 crore? And auditor gives a one-page explanation to them. Okay, you know, these are the factors I considered and this is how I determined materiality to be 2 crore. Then you've not only taken a decision, but you have taken an informed decision. And you've not only taken a decision, but you have taken a informed decision. Are you understanding that? Like more simple example, if I say 111 into 7, how much it comes to? 777. You can write it directly. And this is the final answer. But another way, if you have to solve it in your school days, how you have to solve it? 1 sevens are 7, 1 sevens are 7, 1 sevens are 7. Or if I make it say little 111 into is 70. Right? Then again, first I write over here is the 0. And then after that this answer. So now my teacher comes to know regarding how I have achieved this answer. So it's not only the answer, I have given the working of the answer also. It's not only the answer, I have also given the working for that answer. So I have not only taken a decision, I have also given the justification for my decision. I have also given the logic behind my decision. I have also given the rationale behind my decision. Now from where will my logic come? From where will my logic come? From where will my justification, explanation come? Right, so what does the definition of professional judgment say? Are you all with me? Right, so what does the definition of professional judgment say? It is the application of. So what are you doing? You're applying. What are you applying? You're applying your relevant TKE. What is TKE? You're applying your training, you're applying your knowledge, and you're applying your experience. So training, knowledge and experience. Right? So whatever training you've undergone, whatever knowledge you have and whatever knowledge you have gained, based on last 20 years you're doing audits, so based on the experience that you have gained, within the context provided by the auditing, accounting and the ethical standards. So obviously keeping in mind the requirement of the auditing standards, the accounting standards and the ethical standards. What are the ethical standards? We discussed yesterday: integrity, objectivity, professional competence, due care, confidentiality and professional behavior. Right? So auditing, accounting and ethical standards in the making of the informed decisions. In the making of the informed decisions. That is professional judgment. What do you apply? You apply your TKE. What is TKE? Training, knowledge, experience. Do you do everything as you wish? No, you have the boundary of the auditing, accounting and ethical standards in the making of the informed decisions. Right? In the making of the informed decisions. Right? So if I want to make it more simpler, if we want to make it more simpler, what do we say? Professional skepticism. You know, professional skepticism. I'm not talking about judgment right now. Professional skepticism is equal to questioning mind. It means having a questioning mind. And professional judgment means, right? Professional judgment means what? It means the informed decision making. It means the informed decision making. Decision making which is backed by certain in decision making which is backed by certain logic. Right? So training, knowledge and experience within the context provided by the auditing, accounting and ethical standards in the making of the informed decisions. Right? In the making of the informed decisions. Okay. Right. So if we see over here, professional judgment. What does it say? The application of relevant TKE. What is TKE? Training, knowledge and experience within the context provided by the AAE. What is AAE? Auditing, accounting and ethical standards in the making of the informed decisions, right? So training, knowledge and experience within the context provided by the auditing, accounting and ethical standards in the making of the informed decisions. That is the definition of the professional judgment. Is it clear? That's the definition of the professional judgment. Okay. And professional judgment is essential to the proper conduct of an audit. Rather, you can so say that if your judgment is proper, your audit is proper. Because where you need to exercise judgment in the audit, you need to exercise judgment throughout the audit. Right? You need to exercise the judgment throughout the audit. So where in the audit you have to take the decision, how much is the materiality, how much is the audit risk, what are the audit procedures, then the AE. What is AE? Audit evidence. You'll understand SAAE in the next chapter. Right? So audit evidence obtained, evaluation of management's judgment, drawing of conclusion. So what does it say? Throughout the audit, auditor, you have to take the decision. Right from the planning stage up to the conclusion stage of the audit, right from the planning stage up to the conclusion stage of the audit. Throughout the audit, auditor, you need to take the decision. So how much audit materiality, how much audit risk, what audit procedure, how much audit evidence, evaluating management's judgment and the drawing of the conclusions. Right? Throughout the audit, auditor, you need to take the decisions. Is it clear to everyone? Okay. Now, what does it say? Professional judgment is to be exercised throughout the audit and it also needs to be appropriately documented. Documented means what? Whatever I do in an audit, I need to write about it on a piece of paper or I need to create a soft file for the same. Whatever I do in the audit, I check 20 samples of inventory. So I need to keep the documentation of how I check those 20 samples of inventory. Right? That is wherein we talk about the documentation, to document whatever work you have done. Right? We also have a standard on that, SA 230, which is audit documentation. Right? So whatever decisions you take in the audit, yes, whatever decisions you take in the audit are also required to be documented. So say you have taken a decision in the audit that audit materiality is going to be 70 crore. Now you just can't write in your file ke audit materiality 70 crore. What you have to write? You have to write down the explanation. Okay, how you came to the figure that audit materiality is 70 crore. Are you understanding? You decided to check 20 samples. So you have to document in your audit file that how you decided if population was 100 that you need to select 20 samples. You understand? Not only your decision, the logic behind your decision should also be documented. Because say last year you did this audit. Now you leave the firm. Example, now you leave the firm, whichever CA firm you were doing the audit from. Say you were working in E&Y and then when you were doing the audit, you took 20 samples and you took materiality 70 crore and then you left E&Y. Okay, and now next year, but E&Y still do they have to do the audit? E&Y next year still do they have to do the audit? Yes, and now next year some other person is sent for doing the audit. And now that other person, what he will do? He will see last year file, last year how audit was done. And last year what you had done, you had taken materiality to be 70 crore and sample size to be 20. Now this person, by looking at the audit file, should he understand how materiality has come to 70 crore or how samples have come to 20? Yes, he should understand. If he does not understand, that means it is not appropriately documented. That means your decision making is not appropriately documented. Are you understanding that? Like, sometimes when you do your problems in maths or so, you don't give the final answer. You give the working notes also, no? You give the working notes also. Like sometimes you have to do some problem in algebra or so, or in mathematics or so, some theorem or something you have to prove. You write down step 1, then you apply the step, then you apply step 2, you come to some number, then you come to step 3, step 4, and then step 5 is the final answer. Right? Do you like directly write question number 1 and you write down the final answer 25 lakh? No. You write down step 1, 2, 3, 4, and then there is stepwise marking which is there in the exams. You understand that? So it is to be appropriately documented. And tomorrow, if anybody says, "Arey auditor, you did not do the audit properly," what is going to save the auditor? The audit documentation. They say, how you can say that I did not do the audit properly? Look at my audit file. All decisions that I have taken in the audit, I have appropriately documented. Are you understanding that? What is judgment? Decision making. Where in an audit do you have to take the decision? Throughout the audit. Where in an audit do you need to take the decision? Throughout the audit. And all these decisions need to be appropriately documented. Okay. Right. So auditor is required to prepare audit documentation sufficient to enable an experienced auditor having no previous connection with the audit to understand the significant professional judgments. That means what I told you, you left E&Y and now another CA is doing the audit. So that another CA, can I call him as the experienced auditor? Yes, but has he done the audit previously? No, he is having no previous connection with the audit. Should he understand how you determine the materiality to be 70 crore and sample size to be 20? Yes, such should be your audit documentation. Such should be your audit documentation. Are you able to follow this, everyone? And professional judgment is to be used, it is not to be misused. That means what? Professional judgment is not to be used as a justification for decisions that are not otherwise supported by facts and circumstances of the engagement. Right? Professional judgment is not to be used as a justification for decision. That means what you're saying. Okay, you know, last year I had taken materiality 60 crore. So my professional judgment says, my informed decision making says that this year I should take materiality to be 70 crore. Now in this case, are you using what you say? Are you using your professional judgment or are you misusing professional judgment? You are misusing the professional judgment. You understand? You say last year I checked 20 samples, so this year also I will check 20 samples only. It is not to be used as a justification for the procedures, which otherwise you would have for decisions that are not otherwise supported by facts and circumstances of the engagement or the audit evidence. Are you understanding? Like another example, you have to check the rent expenditure. If I want to check the rent expenditure, what I should check for that? The rent agreement. What I should check for that? The rent agreement. But what I say, no, there is no need for me to check the rent agreement. Why there is no need for me to check the rent agreement? My judgment says that their rent expenditure would be proper. Why you brought your judgment over here? Was there any need for you to bring your judgment over here? Was there any need for you? No, quick, just sit quiet and check the rent agreement of the company. But you say, no, my judgment says that rent agreement would be proper. So it says it is not to be used as a justification for decisions. Okay, right? So that is the concept of the professional judgment, right? That's the concept of the professional judgment. Okay, and then, yes. No, so that is what, no, but where you are not required to take a decision, there don't take a decision without checking. Like for rent agreement, am I required to take a decision without checking? No, so there why you are doing that? Where it is not to be applied, why are you applying it? That way. Yes. Okay. Right. So now coming to the last part of the SA 200, which says conduct of an audit in accordance with the standards on auditing. We talk about the conduct of an audit in accordance with the standards on auditing. Let me check your memory or your notes. How many auditing standards are there? What happened to 46 all of a sudden? Overall it is 46. How many auditing standards are there? 38 auditing standards. So whenever I am doing an audit, do I need to follow all the 38 standards? Whenever I am doing an audit, do I need to follow all the 38 standards? The ones which are relevant, the ones which are applicable. Like say example SA 299. What did I tell you? 299 is regarding the joint audit. Now I am appointed as a sole auditor, single auditor. So do I need to follow SA 299? Then do I need to follow SA 299? No. SA 501, there is another standard, SA 501, which talks about the audit procedures to check for the existence and condition of inventory. I am doing the audit of Infosys. Infosys does not have any inventory. Do I need to follow the procedures of SA 501? No, then I don't need to follow the procedures of SA 501. Are you understanding that? Right, so what does it say? Comply with all SAs which are relevant to the audit unless and until an SA is not relevant, or it is not relevant because it is conditional and the condition does not exist. Right, so generally in an audit you should follow all the auditing standards, but which SA you will not follow, it is not relevant, or it is not relevant because it is conditional and the condition does not exist. Right, like yesterday I told you about SA 800 also. What is SA 800? It was for the special purpose financial statements. So now your financial statements are not special purpose financial statements. They are general purpose financial statements. Then do you need to follow SA 800? No, then you don't need to follow the SA 800. Are you understanding that? Okay. Now, it says comply with all the SAs relevant to the audit. And comply with all the SAs relevant to the audit. Now, if that means I have to do my audit in accordance with the auditing standards. Now, to do my audit in accordance with the auditing standards, what I need to do? I need to understand the text of the entire SA. Right, so every, like Companies Act, there is the BEAR Act, like Income Tax Act, you have the BEAR Income Tax Act. Similarly, all the auditing standards, right, you have the BEAR text of the auditing standards, which is nothing but there in your auditing pronouncements. Right, which is there in your auditing pronouncements. Like if you see the standards in the 200 series, like see this is SA 200. So what we are studying is a very small snapshot of it. The entire standard is say of 28 pages. Then say there is another standard SA 210, right, which is again on 39 pages. Right, 39 pages. Okay, so now this is SA 210. Agreeing, I'm just giving you an example, we'll discuss it later. Agreeing the terms of audit engagement. What is given in the standard? The introduction to the standard. Right, then after that the objective. Okay, what is it that you need to achieve? Then the definitions, the effective date, right, the requirement, and then the application and the other explanatory material. So it says in order to comply with the SAs, you need to understand the text of the essay. So whatever text I showed you right now, you need to understand the text of the essay, including its application and other explanatory material. Did I show you right now the application and the other explanatory material? Look over here, the application and the other explanatory material, and to understand its objectives and to apply its requirement properly. To understand its objectives. Did the standard have its objectives? Yes, it also had its objectives. So to understand its objectives and then to apply it properly, right? And then to apply it properly. Okay, then what does it say? Yes, in our audit report, we write down a sentence. What sentence we write down in our audit report? Right, what sentence, one more sentence we write down in our audit report? Okay, we have conducted our audit. Okay, yesterday I showed you this sentence. We conducted our audit of the standalone financial statements in accordance with the standards on auditing specified under section 143.10. Right, so we conduct our audit in accordance with the standards on auditing. Should I write this sentence in my audit report if I have not done the audit as per the standards on auditing? No, only if I have done the audit as per the auditing standards, I should mention this sentence in my report, right? So what does it say? Don't present compliance in your report unless and until you've actually complied with the auditing standards, right? So what does it say? Not represent compliance in the audit report unless the auditor has complied with the requirement of the essays or all other essays which are relevant to the audit. You understand? Okay, then how do I come to know that I have achieved, what do you say, followed a particular essay? Like there are 38 standards on auditing. Out of that, say 29 are applicable for my audit. 8 are not, 9 are not relevant. So now, how do I come to know that I have complied with the requirements of these 29 standards over there? It says every standard has an objective. If you achieve the objective of that standard, that means you've complied with that standard. Then you also need to check whether you need to perform any audit procedures in addition to those required by the essay. This was there in professional skepticism also. This was there in professional skepticism also. Okay, what is told in the standard, that is minimum of what is required to be done. But whether there is any need to do anything additional beyond what is required by these standards. And do you have the audit evidence? What is AE over there? Whether you have the audit evidence that if anybody asks you tomorrow, okay, how will I come to know that you have followed SA 210? So you have the audit evidence for the same. You have the information for the same. Right, so that is conduct of an audit in accordance with the standards on auditing. What is point number 1? Comply with all essays. What is point number 2? Don't comply if it is not relevant or the requirement is conditional. Then to comply with the essay, you have to understand the text of the essay. Then don't represent compliance in your report unless and until you've actually complied with the essay. And to comply with an essay means you have to achieve the objective of that essay. You have to check whether any additional audit procedures are required to be performed and whether the evidence has been obtained or not. Right, whether the evidence has been obtained or not. Is it clear to all of you? Conduct of an audit in accordance with the standards on auditing. Right, so there is a lot of other discussion also there in SA 200, which we will cover in the second part, is chapter number 2 also. But right now we come to the last part of our discussion in this chapter, which is regarding the independence of the auditor. And have we already discussed the first part? Right, the independence of the auditor. What do you mean by independence? It implies that the judgment of a person is not subordinate to the wishes or directions of another person who might have engaged him, right, or for his own self-interest. It is a condition of mind and the personal character. It is the keystone upon which the respect and dignity of the profession has been based. Are you understanding that? Right. And then what does it say over here? Independence not only of the mind, but also independence of the appearance. Right. So independent, be independent and also appear to be independent. Right. So they talk about independence of mind and independence in the appearance. What does it say? Independence of mind. Independence of mind. So you know in your mind, are you independent or are you biased in giving your opinion or so. So it says it is the state of mind. What is independence of mind? It is the state of mind that permits the provision of an opinion. That means you are having such a mind in which you are forming an opinion without being affected by. You're forming an opinion without being affected by influences, allowing an individual to act with integrity, exercise objectivity and professional skepticism. Do you understand all these three words? Integrity, objectivity and professional skepticism. That is, in simple language, you've not come under the pressure of anyone and taken a decision. You've not come under the pressure of the management and you have not taken a decision. Okay. Can you see the audio cable? No? This one, I think. Where? No. This one. Let me just try. This, the next to the red one. Huh. It's connected? Connected, okay, fine. Right, so anyways, we can check it later on. Right, so what does it say? The independence of the mind. It is the state of mind. Right, independence of mind is the state of mind wherein you say, they ask you, are you coming under anybody's pressure and taking the decision, or are you taking a decision on your own? So you say, no, generally nowadays in student fraternity, there is a lot of peer pressure over there. Right, so peer pressure, or a lot of competitive exams and so over there, that quota factory and all of that. Oh my God, there are so many students who are, it's like a factory manufacturing the engineers and doctors and all of them over there. Right, so anyways, it says, are you coming under the pressure of anybody and taking the decision or so? Right, so the auditor says, no, I am not coming under anybody's pressure. It says, have you come under anybody's pressure and that is why you are saying true and fair? He says, no, nobody has told me anything. I have no pressure of anyone. On my own, I am saying, without being affected by anybody's influences, I am able to exercise my integrity, objectivity and professional skepticism, and and I am saying true and fair. So it is a state of mind. That means your mind is not having any burden. Are you understanding? Your mind is not having any burden. Right, that is independence of the mind, the state of mind. So now, it says, I know that I am independent, so I don't need to prove it to the world. You may say like that, no, I know I'm not under anybody's burden, I don't need to prove it to the world. No, but you also need to prove it to the world. Why? Because what does it say? It should not appear to the world that you are under pressure. You understand? So it says the avoidance of the facts and circumstances. So it says now you need to avoid such facts and circumstances that are so significant. And such facts and circumstances that are so significant that the third party would reasonably conclude that an auditor's integrity, objectivity, or the professional skepticism has been compromised, right? That the auditor's integrity, objectivity, and the professional skepticism had been compromised. Okay, you come to know that this auditor, who is doing the audit, CA, is Sparkle, who is doing the audit of Growth Limited. Right, just like take it as an example. Okay, what he says, in my mind I am telling you 100% I have given a unbiased opinion. There is no bias in my opinion. That is what the auditor is saying. I have given an unbiased opinion, true and fair view. There is no bias in my mind. But what you come to know, during the year, Growth Limited gifted CA Sparkle 4 circles. During the year, Growth Limited gifted CA Sparkle 4 circles, 4 tires. 4 tires, not the 4 circle. The Audi, it will also have the 4 tires over there. No, right, of 78 lakh. You understand? Or a BMW. You understand? Or a BMW. Now, why will the auditor not say true and fair? And why will the auditor not say true and fair? They sent the auditor for a Europe tour of 21 days. Yes, they gifted 1 kg of silver to the auditor. Anyways, auditor is not allowed to accept gifts from the client. But I'm telling you, he accepted gifts. Now, to the world, does it appear to be independent? You say, no, but in my mind I am independent. What is the use of your mind? In your mind, so you have to be, no doubt about that. But you should also appear to be independent. Do you understand this? Right? You not only be, but you also appear to be independent. Is it clear to all of you? So, what is independence of mind? The state of mind. And what is independence of appearance? The avoidance of facts and circumstances that are so significant. It is so significant that you've taken 1 kg silver from the client. That is so significant that a third party, outside people are saying, you know how this auditor of this company is, he is taking 1 kg silver from the company. Right? That the third party would reasonably conclude that an auditor's integrity, objectivity, and the professional skepticism had been compromised. He's compromised on these. Are you understanding? What has he compromised on? His integrity, his objectivity, his professional skepticism. Is it clear to all of you? Okay. Right. Next part is the repetition of what we've already studied. What is the objective of audit? To express an opinion on the true and fair view. If auditor expresses an opinion true and fair, does that mean that the future of the company is very bright? Does that mean that the management of the company is very efficient? No, it is no assurance as to the future viability of the entity nor the efficiency or effectiveness of the management. Auditor should be straightforward, honest and sincere in his work, and he must be fair and not allow any bias to override his objectivity. So this is talking about integrity and the objectivity. He should maintain an impartial attitude, and look at this sentence over there, be and appear to be. Be and appear to be free of any interest which might be regarded as being incompatible with integrity and objectivity. And many different circumstances or combination of circumstances may be relevant, and accordingly it is impossible to define every situation that creates the threats to the independence and specify the appropriate mitigating action that should be taken. Okay, right. So now what is the next thing which we need to study? Right, independence of the auditor. What are we talking about? The independence of the auditor. Yesterday I gave you a briefing about one section of the company law. Okay, when you are disqualified to be appointed as an auditor of the company, if you are holding a single equity share, or if a partner of your firm is holding a single equity share, or if your relative is holding the shares exceeding the face value of rupees 1 lakh, up to rupees 1 lakh is allowed. Up to rupees 1 lakh is allowed. Are you understanding that? Okay. Why it says, okay, if I am holding a share of Reliance, say I am a CA in practice and I am holding a share of Reliance, can I do the audit of Reliance Industries? Can I do the audit of Reliance Industries? No. The partners of my firm are holding shares in Reliance. Can I do the audit of Reliance Industries? No. Rather, the articles in the office are also not allowed to hold the shares of Reliance. You understand? No, the entire firm, like say if E&Y is doing the audit of Reliance, I'm just giving an example over there. E&Y, one partner of E&Y would be signing the audit report, no? One partner of E&Y would be signing the audit report, but say entire E&Y has 7,000 staff. The entire 7,000 staff cannot hold a single equity share of Reliance. I understand, even the articles. So say you join a Big Four, you join E&Y. Okay, and they say that from tomorrow you have to be sent for the audit of Reliance Industries. They ask you, do you have any share of Reliance? You say, yes, I have 5 shares of Reliance. I purchased them during COVID times. I have 5 shares. What will they tell you? Tomorrow morning before you come to office, sell those shares and then come to office. You know, tomorrow morning, sell those shares and then come to the office. Huh? No. Yeah, because it's a requirement of independence. They will not compensate you for the loss. They will tell you, you don't do your articleship with us, or what they can do is they can send you for a different assignment. But generally as a first year article, you can't have an attitude to say, I will not sell my share, you know, because it will make a loss or something like that. Because it will affect your opinion, no? Will you be able to form an independent opinion? You'll be influenced, no, because you are having a share. You know, because if I show higher profits of the company, the share price will increase. So my share price will increase over there. And my share price, I will get a higher return on the money over there. Right? So it says even a single equity share you should not hold. That level of independence. It is. They take a declaration from all the employees and personnel of the firm. No, when you are the auditor and after, till the time you are the auditor, like for 5 years, 10 years, that period you should not be holding the share. Later on, you can hold the share. Are you understanding that? Right? So they take a declaration from all the firm personnel. Like say Zomato is coming up with an IPO, or it has already come up with an IPO. Listen to me. Example, I don't know, but I'm just saying, say PwC were the auditors of that IPO, were the auditors of Zomato. So mail is sent to all the employees of PwC India. A mail is sent to all the employees of PwC India that we are the auditors of Zomato and you are requested not to subscribe to the shares of Zomato, not to subscribe to this particular IPO. Why not to subscribe to this particular IPO? Because you will be disqualified under the company law. You will be Yes, you will be disqualified under the company law. Okay, right. Then company law says, if I am an employee of Reliance, yes, if I am an employee of Reliance, like I am a chartered accountant in practice, and say I am also working in Reliance as an employee, can I do the audit of Reliance? It says no. If you are an employee of the company, again you cannot do the audit of that company. Right? So if I am a director in Reliance, if I am an officer, or if I am an employee of the company, can I do the audit of the company? No, I cannot do the audit of the company. I cannot do the audit of the company. Okay, right. So these are the examples of the disqualifications. There are 9 disqualifications. I've just given you example of the few over here. Right? Disqualifications of the company auditor. What does it say? Okay, these disqualifications of the company auditor. Right? So what are we talking about? Is talking about the independence of the auditor. And whenever we talk about the term independence of the auditor, we have to check whether there are any threats to the independence of the auditor, whether there are any threats, whether there is any danger to the independence of the auditor, whether there is any threat to the independence of the auditor. Are you understanding? So the moment I talk about the term independence, the next term coming to your mind has to be to check whether there are any threats to the independence of the auditor. Threat, that means which could affect the independence of the auditor. What is threat? Something which could affect the independence of the auditor. And they have defined the 5 types of threats to the independence of the auditor. Right? They have defined the 5 types of threats to the independence of the auditor. What are the 5 types of threats to the independence of the auditor? One you have is the familiarity threat, right? The familiarity threats. Then after that you have the self-interest threats. Self-interest threats. Then you have the self-review threats, right? Self-review threats. Then you have the advocacy threats. Then you have the advocacy threats. And the last one you have is the intimidation threats. Last one you have over there is the intimidation threat, right? So what are the threats to the independence of the auditor? FSSAI. Right, the 5 types of threats to the independence of the auditor. What are the 5 types of threats to the independence of the auditor? Familiarity threat, self-interest threat, self-review threat, then the advocacy threat, and the intimidation threat, Right, for each of the type of threat, what are the 5 types of threats? Familiarity threat, self-interest threat, self-review threat, advocacy threat, and the intimidation threat. For each of the type of threat, you need to know what is the meaning of this type of threat and also what are the examples of this type of threat. What is the meaning? What are the examples? What is the meaning? What are the examples? Right? What is the meaning and what are the examples of this particular type of threat to the independence of the auditor? Okay, right? Threats to the independence. So if there are threats to the independence of the auditor, should the auditor do the audit? If there are threats to the independence of the auditor, should the auditor do the audit? No, the auditor should not do the audit because it is impairing his independence. It is affecting his independence. He should not be doing the audit in such a case. Okay, so independence of the auditor, familiarity threats. I'm just giving one examples right now. Like example, you are accepting gifts from the client. Right? Or one more example over here, you are having a long association with the client. And Reliance Industries was being audited by one particular CA firm for 35 years. 35 years, same auditor doing the audit. Don't you think you might be knowing in and out the organization? And that is why it was allowed in 1956 that same auditor can do the audit for any number of years. In Companies Act 1956 it was allowed. Okay, and one auditor, can he do the audit of the company for 100 years also? Yes, but in 2013 law, it says for certain classes of companies, what does it say? A firm cannot do the audit for more than 10 years and an individual cannot do the audit for more than 5 years. A firm cannot do the audit for more than 10 years and an individual cannot do the audit for more than 5 years. Why? Because they identified it as a familiarity threat. If same auditor is doing the audit for 30 years, 40 years, 50 years, he'll become so familiar with the client. There will be no objectivity. And a client says, what auditor? You are working with us with such a long time. You don't trust us or what? And what auditor? One entry you can't adjust or what? So then auditor says, okay. Like, so that what? Familiarity threat. Okay, then next one is the self-interest threat. That means what? Your total receipts of your CA firm. Are you with me? Total receipts of your CA firm means your CA practice, the total, you get receipts, no? You get fees from the various clients. The total fees which you receive from all your clients put together is 20 crore. The total fees which you receive from all your clients put together is 20 crore, and out of that 18 crore is coming from Growth Limited. Out of that, 18 crore is coming from Growth Limited. Can you afford losing the client Growth Limited? Because directly the receipts of your firm will come down from 20 crore to 2 crore. So what is that? That is the self-interest threat. Self-interest threat. Are you understanding that? You're having a business relationship with the client. They are doing business, you're 20% partner in that business. So obviously again that is a self-interest threat. You understand? So undue dependence on the total fees of the client. Undue dependence on the total fees of the client. Yes, you are having dependence on the fees of the client. Are you understanding that? Or you are considering the potential employment with the client. Right? Employment. Then they're giving you an offer. Arey CA, why you're doing so much of headache? 20 crore receipts and all of that. So much of expenditure of your firm. Hardly 2 crore rupees is remaining with you. So what you do, you stop your practice. You stop your practice, you join us as the CEO and we will pay you a package of 3 crore. We will give you, compensate you with a package of 3 crore. So what are you thinking of? Potential employment. What are you thinking of? Potential employment. Okay, you are thinking of stopping your practice and joining Growth Limited only. You're thinking of stopping your practice and joining Growth Limited only. So what is that? That is again your self-interest threat. What is that? That's again your self-interest threat. Then self-review threat. Self-review threat is one where the maker-checker concept gets violated. Why are you not allowed to check your CA paper? We'll never find an error. Why you can't check your own paper? 100 out of 100 or 120 out of 100. We are always right. You understand? So what is self-review threat? Okay, you have done the accounting for the client. Growth Limited has outsourced. You understand outsourcing? Growth Limited has outsourced its accounting work to CA Sparkle. CA Sparkle is doing the accounting work of Growth Limited. Now, can CA Sparkle do the audit of Growth Limited? They've outsourced the accounting work to CA Sparkle. Now, can CA Sparkle do the audit of Growth Limited? No. Why? Because the maker-checker concept is getting violated. Maker and checker should not be one and the same. If you've prepared the financial statements, then to management themselves, they would have done the audit of the financial statements. No. Management is preparing the financial statements. They would have only audited the financial statements. But are they allowed to audit? No, they have to appoint an independent auditor. Are you understanding that? Okay, right. So there is a section in company law, which is section 144, auditor not to render certain services. Right? There is a section 144, which regarding auditor not to render certain services. Why? Because it will lead to a self-review threat. Like one example I gave you, you're doing the accounting. You're doing the investment advisory for your client. And now you have to do the audit for the same client. Can you do the audit for the same client? No. If you're doing the investment advisory, no, you will be biased. You will be biased. You're doing the management services for the client. Now, can you do the audit of the same client? No, you cannot do the audit of the same client. So that will be the self-review threat. Right? That will be the self-review threat. Okay? Maker-checker concept is getting violated. Okay? It is affecting the independence. Then you have the advocacy threat. Advocacy threat, that means you are handling the litigation on behalf of the client. Now generally, if you are fighting a case as a lawyer for a particular company or client, what will you always try to prove for your client? That your client is innocent. Whether actually your client has done the fraud, but still what you will prove in the court of law, you will fight against your opponent. You will fight for your client. No, my client has not done the fraud. No, my client has not done the fraud. So if you are handling litigations on behalf of the client, then can you do the audit of that client in an unbiased manner? No, you cannot do the audit in an unbiased manner. You are promoting the shares of the entity. You're promoting the shares. Litigation. What is litigation? Legal cases. And then you're handling legal cases on behalf of the client. So can you do an independent audit? No. You're promoting the shares of the listed entity, or you're promoting the shares of the client. Can you do the audit? You're telling everybody, you should purchase the share of this company, very good companies. You're advocating. And then you're advocating. Like, one auntie comes to your home and that auntie is saying, okay, you should buy these tiffin boxes. This tiffin boxes, the food remains remains absolutely fresh. Even if you open it after 5 hours also, there is, vapor, fume coming out of the food over there. Absolutely fresh, no change in the taste, okay? And very nice colors of the tiffin, red color, yellow color, green color, very different shapes and sizes available. Very nice tiffin. You say, Arey yaar, this auntie, why she is talking so much about the tiffin? Does she get a commission or what? So much is behind your life. You should buy this tiffin, you should buy this tiffin. Then you wonder why she is promoting it so much. Then you realize, she has an agency. That is why she is telling you so much about it. Right? So what is she doing? Advocating, no? Advocating. Your mother advocates on your behalf so many times. You understand? No? Yes, advocating, right? That is promoting, supporting the client. Okay, so it says, can you give an independent opinion in that case? No. And intimidate. To intimidate someone means to threaten someone. So actually, intimidation threat is threatening threat. But don't write in exam. But it is that way. Okay, threatening threat. Client is keeping you at gunpoint. Saying, auditor, if you don't give a true and fair report, if you don't give us an opinion saying true and fair, we will change the auditor of the company next year. You give only. If you give the report which says it is not true and fair, we will change the auditor of the company next year. The auditor says, oh, you will not continue me as an auditor? Okay, then I will say true and fair. So auditor is he is intimidated, he is threatened. They are telling auditor, nowadays I have seen you are doing lot of checking. What I want you to do, I want you to do less checking. So what they do, they reduce the fee of the auditor. So if they reduce the fee of the auditor, they know automatically the auditor will do the less checking. Or they are threatening the auditor with litigation. They're saying, auditor, we are going to file a complaint against you with the Chartered Accountants Institute, with the Institute of Chartered Accountants. Right? We are going to file a complaint against you under the Chartered Accountants Act. Right? So they are threatening the auditor with litigation, with adverse publicity or so. Right? So what is that? That is the intimidation threat. Right? That's the intimidation threat. Right? You have the fear of the loss of the client. And the loss of the client. You have the fear of losing the client. Then you also have the, the fear of replacement of the client. Yes, you have the fear of losing the client, and then you also, yes, apart from that, you also have the fear of the replacement and also the fear of the litigation. The client is saying that we will file a litigation against you. That is adverse publicity. Right? So adverse publicity, that is what we can mention over here, the adverse publicity. So what are these? These are the threats to the independence of the auditor. What are the 5 types of threats to the independence of the auditor? Familiarity threat, self-interest threat, self-review threat, advocacy threat, and the intimidation threat. Okay, so threats to the independence. The Code of Ethics for Professional Accountants prepared by the IFAC. What is IFAC? The International Federation of Accountants have identified 5 types of threats. What are the 5 types of threats? Yes, the self-interest threats, right? The self-interest threats. Then you have the self-review threats. Then after that you have the advocacy threats, the familiarity threat, and also the intimidation threat. Are you understanding? For each of the type of threat, what you need to remember? The meaning and the example. The meaning and the example, right? So first we'll talk about the familiarity threat. Right? Familiarity threat are self-evident and occur when auditors form relationships with the client, when they end up being too sympathetic to the client's interest. When they end up being too sympathetic. Like the client is telling, what auditor, you are doing audit for last so many years, what you are, small entry 2 crore rupees, why you want to report about it? So auditor says, no, soft-hearted. So he says, oh, okay, no problem, you do the entry, no problem. So too sympathetic to the client's interest. And this can occur in many ways. Close relative of the audit team working in a senior position in the client company. Right? So relative of the audit team, like means again if you join EY for articleship and they say from tomorrow you have to go for the audit of Reliance. Are you with me? Right? You join EY for articleship and they say that from tomorrow you have to go for the audit of Reliance. And then you say, oh yeah, do I have to go for audit of Reliance? Oh, my uncle is the vice president in Reliance. Oh, they say sit over here. We cannot send you for the audit of Reliance. Right? We cannot send you for the audit of the Reliance. Why? Because close relative of the audit team is working in a senior position in the client company. So now you can't say, tell your uncle, you resign, I have to come over there for articleship, for audit. Can you tell that to your uncle? No, so they will not send you only for that particular audit. Are you understanding that? Close relative of the audit team. Then former partner of the firm, being a director or a senior employee of the client. So that means what? Earlier you were a partner in this firm, but now you have become a director or a senior employee of the client. So earlier you were working in E&Y, but now you've joined as an employee or a director in Growth Limited, example. Right, you've joined as a director over there. So then long association. I told you, Rajendra and company, they were doing the audit of Reliance Industries for 35 years. Why? Because in Companies Act 1956, there was no provision for the rotation of the company auditor and acceptance of significant gifts. Right, so during Diwali or something, if they gift you one diary and one pen, that is okay. And one diary, one pen, that is okay. But if they give you one Audi car or some 1 kg silver or so, significant gifts or hospitality from the client company, its directors or employees, again it will lead to the familiarity threat. Right? It will lead to the familiarity threat. Is it clear to all of you? Right. So all these questions, you need to know them for wholesale, you need to know them for retail, and you also need to know them for the correct and incorrect. Okay, next one, self-interest threat. Right? Interest, mainly they are talking about the financial interest. In interest, they are mainly talking about the financial interest. So what does it say? You have a direct financial interest. Like I told you, you have a business relationship with the client, right? You have a business relationship with the client, or you've given a loan or guarantee to or from the concerned client, or you have undue dependence on the client fee. I told you, 20 crore is the receipts of your firm, and out of that 18 crore is coming from one client. So undue dependence on the client fee, potential employment with the client, and contingent fees for the audit engagement. Contingent fees means what? What is client saying? Okay, auditor, if you give true and fair report, we will pay you the audit fee. If you don't give true and fair report, we will not pay you the audit fee. Right? So contingent, which is dependent upon. Right? So contingent fees for the audit engagement. Right? So that is the self-interest threat. Interest is mainly the financial interest. What is the financial interest? Financial interest or indirect financial interest, loan or guarantee, undue dependence on client fee, close business relationship, potential employment, or the contingent fees. These are the self-interest threat. Right. Then you have the self-review threat. What did I say? In self-review threat, the maker-checker concept is getting violated. The maker-checker concept is getting violated, which occurs when during a review of any judgment or conclusion reached in a previous audit or a non-audit engagement. These include non-audit services, include any professional services other than audit or review of the financial statements. Right? So what does it say? These include management services, internal audit. So this comes under section 144. What is section 144? I told you, auditor not to render certain services. Right? Auditor not to render certain services. Let me just explain it, say a little bit more over here. Right? Say example, yes, there are two types of audit basically. There is the statutory audit and then there is the internal audit. Okay, statutory auditor, he expresses an opinion on the financial statements. Internal auditor, he expresses an opinion on the internal controls in the organization. Right? Internal auditor, he expresses an opinion on the internal controls in an organization. Okay. If say C.S. Sparkle has been appointed to do the statutory audit of Growth Limited, can C.S. Sparkle be appointed to do the internal audit of Growth Limited? No, C.S. Sparkle cannot be appointed because it will be a self-review threat. Statutory auditor and internal auditor cannot be the same. This is given by ICAI also. This is told by ICAI also. Okay, statutory auditor, internal auditor cannot be one and the same. Right. If you are an internal auditor of a company, can you be the tax auditor of that company? No, you cannot be the tax auditor of that company. If you are statutory auditor, can you be the tax auditor? Yes. If you are statutory auditor, you can also be the tax auditor. But if you are internal auditor, can you be the tax auditor? No, you cannot be the tax auditor because it will lead to the self-review threat, because it will lead to the self-review threat. Are you getting that? Self-review threat. Okay. So what does it say? When an auditor, having recently been a director or a senior officer of the company. So what was in familiarity threat? What was there in the familiarity threat over there? Close relative of the audit team working in a senior position in the client company. So somebody from the auditor side is working in the client company. And now what is happening in the self-review threat over there? Somebody from the director of the company, has now become the director or senior officer of the company, when an auditor have recently been a director or a senior officer of the company, they have now joined the CA firm, right? Now they have joined the CA firm. So earlier you were working in Growth Limited and now you have joined CA Sparkle. Right now you have joined the CA Sparkle, and when the audit firm performs services that are themselves subject matters of the audit. So that is section 144, auditor not to render certain services. Then advocacy threat. What is advocacy threat? You are promoting the shares or perceived to promote the client's opinion to such a point that your objectivity is getting compromised, like you're dealing with the shares or securities of the company, or you are handling the litigations on behalf of the company. Right? You're handling the litigations on behalf of the company. What is that? Advocacy threat. Are you understanding that? What is advocacy threat? I know that auntie is telling you so much to purchase the tiffin. So you think what? This auntie gets commission or what? Like that. Is promotes or perceived to promote a client's opinion to such a point. Right? What does it say? That the objectivity is getting compromised. So you're handling the shares or you're handling the litigations on behalf of the client. And what is intimidation threat? Intimidation threat occurs when the auditors are deterred. Deterred means they are stopped. Deterred means what? They are stopped from acting objectively with an adequate degree of the skepticism. Right? With an adequate degree of the skepticism. So how this can happen? Threat of replacement. They are telling we'll change the auditor of the company. Or they are reducing the audit fee. Disproportionately reduce the work in response to reduce the audit fee. Or they are threatening the auditor with litigation. And such threat attempts to intimidate auditor. They threaten. Auditor gets scared. To get intimidated means what? To get scared. To deter from acting objectively. To deter from acting objectively. Are you able to follow this? What are these? These are the threats to the independence of the auditor. What are these? These are the threats to the independence of the auditor. Familiarity threat, self-interest threat, self-review threat, advocacy threat, and the intimidation threat. For each of the type of threat, you need to know the meaning, example, meaning, example, meaning, and the example. Right? We still have a few, guidelines, guiding principles, safeguarding independence, and a few correct and correct to see, which we will see after the break. Okay.